to kindly be seated and please put your phones on silent mode. Thank you. Ladies and gentlemen, the chief guest for today's event, Mr. Shashank Priya, has arrived. Can we all please welcome him with a thunderous round of applause? Mr. Shashank Priya, member GST CBIC, Ministry of Finance. Kindly keep the applause going as we welcome him. Thank you so much for gracing this event with your benign presence, for sparing your valuable time for us. Distinguished invitees, assembled delegates, ladies and gentlemen, on behalf of ASSOCHAM, I extend a very warm and hearty welcome to all present here at the National Conclave on 6 years of GST, transforming the indirect taxation system. Can we all please start with a round of applause? Thank you very much. I'm your host, Prerna, and I'm delighted and privileged to play host to such an accomplished audience. And as a good host should, I would like to thank each one of you for taking the time out and joining us for this event. Ladies and gentlemen, today all of us have gathered here to commemorate the 6th anniversary of Goods and Services Tax and its transformative impact on the indirect taxation system. The National Conclave provides a platform for industry leaders, tax professionals, policy makers, experts to come together and engage in insightful discussions on various aspects of the GST framework. It also provides an opportunity to reflect on the past, share best practices, and explore future strategies to further enhance the taxation system of our country. Finally, we express our heartfelt gratitude to all our partners for their wholehearted support. And on this victorious note, let this National Conclave commence. May I now request the respected dignitaries present here to kindly light the ceremonial lamp. Chief guest, Mr. Shashank Priya, member GST CBIC, Ministry of Finance, to please step forward for the lamp lighting ceremony. Joining him are Mr. Prateek Jain, Chairman, National Council on Indirect Taxes, ASSOCHAM, Ms. Pooja Ahluwalia, Assistant Secretary General, ASSOCHAM, Mr. Vineet Agarwal, Senior EVP and Group Head Taxation and Ethics, JSW Group, and Co-Chair, National Council on Direct Taxes, ASSOCHAM. Can we all please give them a round of applause as they proceed for the lamp lighting? With the lighting of the lamp, thank you very much. And I request the esteemed dignitaries to please be seated on the stage now. I request the esteemed dignitaries to kindly proceed and please be seated on the stage. Once again, a very warm welcome. And now we'll take the opportunity to welcome the chief guest, to formally welcome him. I request Ms. Pooja Ahluwalia to welcome our chief guest, Mr. Shashank Priya, member GST CBIC, Ministry of Finance, with a bouquet. Please join me in welcoming our honorable chief guest. We are truly honored to have you with us today. Thank you very much. With all means of warm and friendly welcome, I have the pleasure to now invite on the dais Mr. Prateek Jain, Chairman, National Council on Indirect Taxes, ASSOCHAM, to set the context for today's discussions. Please welcome him on the dais, ladies and gentlemen.
Good morning, everyone. Mr. Shashank Priya, member GST CBIC, Vineet Agarwal, Ms. Ahluwalia. It's a pleasure being here. We have completed 6 years of GST. 6 years is too short a time, really, to pass any verdict on such a landmark reform that India has seen. But if I have to look at GST, and there are 3 stakeholders, right? One is the government, other is industry, and then consumers. These are 3 stakeholders. And let us look at from each one of them, their perspectives. From government perspective, you read in the newspaper about this buoyancy in collection, 1.5 lakh crore, 1.6 lakh crore. Some would say that it will touch 2 lakh crore very soon, right? The buoyancy of 1.25 after GST has come in. It's a great achievement from a government standpoint, right? The states were talking about compensation. Now you see that that noise has gone down because states are now, many states are collecting much more than what they were collecting earlier. So tax base has significantly expanded. Number of taxpayers have gone up significantly. And that would mean the tax to GDP ratio is set to go up. Looking at from the industry standpoint, everybody knows that how supply chain has become much more efficient, and the borders have opened, and so on. Prices of most of the commodities have come down, except for services where the rate of GST increased. If you look at the effective tax rate on most of the products, actually has gone down. And then anti-profiteering and things like that at the beginning of the GST ensured that industry is on, is passing it on to a large extent to the customers. Of course, there are issues, and we will dwell on some of the issues today. Looking at from the consumer standpoint, I as a consumer, earlier we had a choice to make. If I had to buy a camera, somebody would say, okay, get a billing from Silvassa done because it's 1% CST or whatever, right? So as a consumer, I had to make a choice when I'm buying a mobile phone or this thing. Even when I'm taking petrol, which of course is outside, is always a thing from which state should you buy it. Now largely that is gone. So consumers are feeling much more at ease. Now I think the state has come where the next phase of GST would be on the back of enablement, empowerment, and encouragement of the customers, because large amount of, and Mr. Priya would bear me out, large amount of tax evasion, if you think about that, would be in a B2C segment. So if the consumer is aware and consumer is incentivized more, all of you ask for an invoice from the vendor, then obviously we can take it to the next level. Now, does it mean that we don't have any issues on GST? Of course not. There are multiple of them, right? There are issues of legislative simplicity. ITC provisions are very complicated. There's huge amount of litigation happening, multiple audits, investigations, newer requirements. Every time there's an investigation happening, someone will say, okay, give me a state-wise trial balance. Somebody would say, why haven't you done a cross-charge? Why haven't you included salaries and so on? So there are a lot of issues. So as ASSOCHAM, what we've done is, and I'm not sure whether you have got a sort of that paper with you right now, but we are submitting 4 documents today to the government. One is on how to reduce litigation, because we believe that any successful tax reform will not achieve its objective unless you take definite and decisive measures to reduce litigation. So there is suggestions around that. Second is legislative changes. What kind of changes should you bring in? And we're not talking about small, minor issues at this point in time. We're talking about, things which are bigger. Third is compliances. What are the changes which are required to be made in return filing and maybe in the GST and framework and so on. And fourth is, what are the specific things which India has to do, or government should do, for sustainable development? From a, let's say, if you're looking at climate and environment, shouldn't your tax policies be aligned to that? Shouldn't you give, for example, credit on CSR expenditure? Shouldn't you rate companies on their ESG rating and say, can I reduce the GST rate for this kind of industry? Shouldn't you look at renewable industry and say, okay, whether 70-30, that formula is the right formula, and shouldn't we incentivize renewable energy more? So those are the things that we have debated. Now, of course, it's a beginning, right? 6 is, as I said, is a too short a period. There are a lot of things which have been done. 50th GST Council meeting is going to happen soon. So it's a process. But we want this event, this conference, to initiate some of these dialogues, right? So please hear, please listen to the conversation going on, but more importantly, ask questions, whether you do it now or send your comments, send your reactions to this, because collectively, if we all work together, the government, the industry, and the consumers, only then we can make it from good GST to the great GST. So thank you very much for coming in, and look forward to engaging day. Thank you.
Thank you, Mr. Jain, for providing us the necessary background for our discussions. And I now request our respected chief guest to kindly release the ASSOCHAM recommendations on 6 years of GST. A round of applause, ladies and gentlemen, as we release the ASSOCHAM recommendation on 6 years of GST. We will be mailing the soft copy to our delegates. Thank you very much. It is indeed an honor to invite on the dais our chief guest, Mr. Shashank Priya, member GST CBIC Ministry of Finance, to render the keynote address. Can we all please welcome him with a thunderous round of applause?
Ms. Pooja Ahluwalia, Assistant Secretary General, ASSOCHAM, Shri Prateek Jain, National Council, Chairman, National Council on Indirect Taxes, ASSOCHAM, Shri Vineet Agarwal, National Council of Direct Taxes, ASSOCHAM, all the dignitaries in the hall. I first and foremost thank the organizers for having invited me here. It's always good to listen to the suggestions, the feedback that the most important stakeholder that we have for GST, that is the taxpayers. A lot has been talked about GST, but when we are celebrating the 6th year, perhaps it is good to recall a little bit what the indirect taxation landscape was before the introduction of GST. Because when we talk of further simplification, we should also celebrate the monumental changes that the GST brought about. So, as all of you would know, you would have suffered. Goods were subjected to taxation at 2 points, at the stage of manufacturing, then at the stage of retail. There was central excise and VAT, and there was an additional complication, interstate sales. There was a central sales tax enacted by the central government, but states would collect it because they had limited jurisdiction within the state. No input tax credit will pass on of CST paid to under VAT. Services were taxed by the central government. Credit could pass on to the central excise, but not to VAT. So what was the result? A lot of cascading, and that would affect the consumers adversely. There were innumerable VAT rates, different procedures, so the taxpayers would be sort of doing multiple compliances. And as Prateek mentioned, there was this tendency that you would, some of the states and UTs in fact benefited out of that. They would keep taxes on some high value items lower compared to the nearby states, like motor vehicles, and therefore the nearby state consumers would also go and purchase their goods from the territory where there was a lower tax. Then there were also problems, interpretation issues. Prateek mentioned we have a huge dispute, but I don't think we are strangers to dispute in the pre-GST regime also. And a whole lot of dispute, not only in excise service tax, but there were also some major sort of seminal issues like whether an activity was a sale or it was a works contract. So those are all issues that would be agitated before the various legal fora. So I would not be exaggerating if I say that the taxpayers in India were caught in a very complex web of indirect tax system. And what happened on 1st July 2017? This cobweb got cleared by GST. I would dare say that perhaps it can be regarded as a day of spring cleaning of the indirect taxation system of India. What got cleaned away? 17 taxes. Whole lot of them, some of you now look so distant, but they were real, I think, issues of considerable debate and dispute. So we have excise, we have additional duty of excise, excise duty on medicinal and toilet preparations, service tax, state VAT, CST, purchase tax, big issue, entertainment tax, luxury tax, entry tax. So taxes on lottery and betting, we are, of course, carrying some of those legacy issue here in GST also. But all these got subsumed, and what came out of it was GST. Additionally, 13 cesses were also subsumed. So we must remember that we must pay a tribute to the sagacity of our political leadership, both of the central and the state governments, who agreed to pool their taxing sovereignty into a new constitutional body called the GST Council. Now, both of them agreed to take upon themselves a concurrent power to tax supply of goods and services across the entire supply chain from production to distribution. And this, in a way, heralded a new era when India became truly a unified market. One important thing is that we must remember that GST law is completely homegrown. So that has its advantages in terms of familiarity with what provisions are, what the legal precedents are, but it also has certain challenges that taxpayers may feel that some of the procedures that were irksome earlier have been carried forward in the GST. But it was the committee of officers who worked really day in and day out on various aspects of the new tax architecture. There were various committees. I happened also to be, that time, associated with some of the work of the GST. So there were committees and groups for threshold and exemption, for registration, payment, place of supply rules. So there'd be, days and days spent on discussing and trying to work out, very divergent positions into a common position. And finally, one had to work really hard to bring out the draft model GST law. And then this whole action shifted to the GST Council. And again, I must say that it was really wonderful to see the GST Council working during that time. I was serving as a joint secretary in the GST Council. The kind of breakneck speed at which they worked. They had 18 meetings in a span of just 9.5 months. GST Council came about in 15th September 2016, and 1st July it came about, the GST. So by 30th June they had met 18 times, and they had thrashed out threadbare various issues relating to GST, what should be GST law, rules, rate of taxes, ticklish issue of compensation formula, and then another matter which attracted considerable debate was what would be the modalities of dual administration under GST. But finally, all this got sorted out, and the discussions in the council was so, informed and so statesmanlike. So it was really a tribute to the council members under the leadership of late Shri Arun Jaitley, who worked all this out. And this is what enabled the launch of GST from 1st of July 2017. One of the very important features, and all of us who were working on GST, we were very keen to ensure that, is that GST must work on a state-of-art automated system. There should be no physical interface. And now we have all the front-end processes, registration, return filing, payment of taxes, refund claim, everything is online, and this has completely eliminated the interface between the taxpayers and the tax department. GSTN, it's a body jointly owned by the state governments and the central government. It manages all these front-end processes, and it is also leading from the front, of course, based on the suggestions made by the center and the state, to make continuous technological enhancement to make the system more efficient and trade-friendly. There are several features that have been introduced, and it will continue to going forward. It will keep getting introduced regarding auto-population of data, auto-generation of returns, like e-invoicing. The way the data can be auto-populated in GSTR1 and in e-way bill, it is revolutionary. And all this is expected to really ease the compliance burden on the taxpayers. Another game changer in GST has been dismantling of border checkposts. Now, instead of physically officers being present at the border, controls are exercised in a very unobtrusive way through an e-way bill system, which is generated online, a very simple document generated online. And this removal of interstate barrier, as Prateek also mentioned, has considerably reduced the logistics cost. It has led to cost optimization for the manufacturer, and all this finally has also helped the consumers. GST has a dual administration, but in a way it is a unified tax administration. Not only all the laws are common, but for one taxpayer there is only one administration which administers both the laws of the center and the state. CGST and SGST and IGST, all of them are under one jurisdiction, and that really required a lot of creative thinking. How do we do the cross empowerment so that we sort of cross the hurdle, the legal hurdle of cross jurisdictional functionalities. It is, I find it so good that all this scrutiny of returns, audit, etc. is done only once and by one administration. No more multiple activities on these front, because I know as a central excise officers, people used to come harassed that, no, today I have come to you, tomorrow I am going to the VAT commissioner for some, further hearing. So all that has been taken care of. And another very good thing has happened, which again took a lot of effort for everybody to come around to, is one authority giving refund. Because originally it was envisaged that CGST authorities will give refund of the CGST and SGST for SGST, but again that was not a very happy arrangement, and it is so good that now it has become one, that taxpayers have to only deal with one administration. So not only this, I find the two administrations, they are working more and more in sync, and they are in that way giving strength to each other. What kind of facilitation steps they are taking, they share in official meetings. What kind of enforcement steps that they are taking, what kind of analytic tools they have built, all that is available. So the innovation, creativity, expertise of all tax members, of all the tax officials across the country is available to all others. So that's a wonderful thing that has happened, and we intend to harness this power more and more as we go further. In GST, another very good thing in our view is the attention that has been paid to ease the compliance burden on MSMEs. Now, not only they have easier access to a unified market through a more facilitative interstate movement of goods, they have lesser burden of record keeping, they are no more subject to multiple audit and return scrutiny because they have very little manpower. So it is really good for them that they don't have to sort of use large number of manpowers for this kind of compliance activity. Online payment, again, now we take it for granted, but it was not there for all administrations. So all that is welcome step. And another thing is that there was originally a thinking, and even now that feeling is there, which Prateek also mentioned, that it is a little compliance heavy for obvious reasons, that we want it to be as foolproof as possible in regard to evasion activity. But in order to help them, a more simplified composition scheme has been extended to the smaller taxpayers. Then we have made QRMP, quarterly return monthly payment scheme. Then we have waived annual made optional the filing of annual return, waived the annual reconciliation statement, and we have also enabled filing of nil return through SMS. All this we hope we believe that this has helped MSMEs to accept GST more openly. Another hallmark of GST I see is that it has been very nimble-footed in addressing the concerns of taxpayers after it was rolled out. And you would see it in many changes that the GST Council did at very quick, with a very quick turnaround time. Like keeping in view the sentiments of the stakeholders, the annual turnover threshold of the registration for supply of goods for most of the states was increased from rupees 20 lakh, which was originally envisaged, to 40 lakh from April 2019. Eligibility of composition scheme for supplier of goods was increased in most states. Originally it was 75 lakhs, then in October 2017 it was increased to 1 crore, and in April 2019 it was further increased to 1.5 crore. Supply of services, initially they had to get registered if they did a supply through e-commerce operator, which created a lot of problem. So supply of services up to a specified threshold was allowed through e-commerce without mandatory registration. This was brought about in November 2017. And then a composition scheme was also introduced for smaller supplier of services from April 2019. So this was on the procedural part. On the tax rate, as Prateek says, consumers are also a very, very important stakeholder. So keeping in view the consumer sentiments, tax rates on many household items were rationalized after the introduction of GST. For instance, tax rates on parts and accessories for carriages for the Divyang vehicle, they were brought down from 28% to 5%. Tax rate on tableware, kitchenware, briefcases, handbags, etc., brought down from 28% to 12%. Tax rate on furniture, wood items, electrical equipments, they were brought down from 28% to 18%. Tax on certain food items brought down from 18% to 5%. Very importantly, the 28% slab of tax was pruned substantially. Originally, it had 229 items, and now we are left with only about 37 items. So a lot of changes were done to sort of responding to the pain points that was brought out after the implementation of the GST. And all this rationalization, we must remember that while the revenue neutral rate that was attempted when the rates were fixed, it was 15.3%. That's how the rates were arrived at, taking into account the pre-GST combined rates of VAT and central excise. But after rate rationalization, the actual average rate has come down to 11.6%. This did affect revenue initially, but now, of course, we are in a much better state. We have also been regularly improving the compliance system, both to ease the taxpayer and also to ensure that there is more discipline in the entire administration of the GST regime. So one of the biggest changes one of the most beneficial changes, I would say, has been the introduction of this system of sequential filing of return. And, first you have to file GSTR1 and 3B, and if you have not filed 3B, then you cannot file the next GSTR1. And this has really improved discipline of filing of returns, which was earlier hovering around 70%, 75%. It has now gone up more than 90%. And it is comparable to some of the best tax administrations in the world. And as I mentioned, MSMEs find it very easy to file their returns in the QRMP, Quarterly Return Monthly Payment Scheme. And for those who have a turnover up to annual turnover up to rupees 5 crore. And that is, instead of normal 24 returns, now they only have to file 8 returns. Anyway, as the saying goes, the proof of the pudding lies in eating it. So we have to ask, how does the GST pudding the GST pudding been received amongst the GST stakeholders? And it has been heartwarming to see this recent survey of GST at 6 by Deloitte, which shows that India Inc. has given a thumbs up to the progressive momentum of the GST regime. About 94% of respondents have expressed positive sentiments about GST. Very importantly, 88% of the MSMEs have reported a reduction in goods and services cost along with optimized supply chain. 65% businesses believe that GST has helped boost investment, and 93% respondents perceive the GST regime to supplement the government's Atmanirbhar Bharat movement. Elimination of interstate boundaries, as survey shows, has expedited movement of goods and reduced logistics cost. GST has also benefited the exporters. Export has been now more effectively zero rated. There are no embedded taxes now, and refunds are much faster. So in a nutshell, we can confidently say that GST has also helped to enhance the competitiveness of Indian industries. Now, all this is also reflected, the improved compliance, greater formalization of economy, of course, along with the economic growth. All this is also reflected in the increase in the GST revenue and the number of registrations. The monthly average revenue in the financial year 2017-18 was rupees 89,885 crore, and in 22-23 it has jumped to a monthly average of rupees 1.50 lakh crore. In 23-24, as of now, we are clocking an average monthly revenue of rupees 1.69 lakh crore. So hopefully this upward trend will continue, and that will continue to give strength to all the stakeholders in GST. And Pratik also mentioned that this has also shown that tax buoyancy, that is the ratio of tax growth compared to GDP growth, has been more than 1. Normally, if it is 1 also, it is good. It has been 1.25 between the period 2018-19 to 2023. And in the last 2 years, it has also been increasing, and it is closer to 1.40. Number of taxpayers, registered taxpayers, started with a relatively modest figure of 67.83 lakh. Now it is close to 1.4 crore. So overall, I would say the GST system has stabilized. Pratik says it is a short time in the history of a monumental reform like that. That's absolutely correct. And we have to, as we go forward, we have to keep seeing that this stabilization becomes more and more. GST law, which appeared at the initial time to be complex, now both the trade as well as officers have started understanding well. In fact, some of the trade people have also come and complimented that now they realize how it is easy to ensure compliances once if your paperwork is proper. Having said all this, it is no one's case that now we have reached a stage of nirvana. It is a perfect GST. We don't have to do anything. There is still work to be done, and both the administration of the central and the state government, they are always open to ideas and suggestions how to improve further the trade facilitative aspects of GST. But important thing to remember is that, we have many stakeholders. So we cannot have a big bang changes. It has always to be very calibrated. It has to be consultative. It has to be collaborative, as both center and the state have to come on the same page. And finally, it is under the guidance of the GST Council. And we must remember that the tradition also set in the GST Council is that the decisions are taken by consensus. As far as the administration is concerned, we started with the idea that the GST should be very trade-friendly. We had deemed time period for approving the registration. If officers are not fast enough, then if they don't respond within 3 days, then it will be a deemed approval will be given. Documents were proposed to be kept simple. Physical verification was not proposed as a matter of routine. So a lot of things, after a lot of deliberations, it was said that, new tax regime, when the new taxpayers enter it, they should have a different vibe about this administration. A lot of taxpayers have welcomed it, and it is good that their transaction cost has come down. But at the same time, we are also struggling with the menace of fake registration and large amount of fake input tax credit floating around in the GST system. We are now presently in the middle of a 2-month All India special drive against fake registration, which has started from 6th May, and it will continue till 15th July. As on yesterday, that is on 4th July 2023, we have, through risk evaluation parameters, identified 69,607 GSTNs for physical verification. And out of this, 85%, that is 59,178 GSTNs, have been verified. 28% of them, number 16,989, are found to be non-existent. So that's a matter of great concern. 11,015 GSTNs have been suspended and 4,972 GSTNs have been cancelled. We have till now been able to detect tax evasion of rupees 15,035 crore, and ITC of rupees 1,506 crore has been blocked. We also have been able to recover rupees 87 crore of this wrongly taken tax. So obviously this menace is something that we all need to collectively put our mind together to see how we can curtail it, not with a very heavy hand, but with a softer touch and with the use of technology, and also keeping in mind that the genuine taxpayers do not suffer. We know that there are some issues regarding e-commerce operators and those who are supplying through e-commerce. They are suffering in some cases, and we are trying, we'll see how best we can address it. So we are, as I said, wanting to use technology to plug the loopholes in registration and return filing. In the registration process, we are proposing to do more data verification through third-party databases. We are also proposing to refine the risk parameters for registration so that on real time, some red flagged registrations application can be shown to the administration for further physical verification. In the same line, for high-risk applicants, we are now going to start a pilot for biometric authentication of Aadhaar of these applicants. We are also going to look at mandatory physical verification of premises for high-risk applicants. Again, data analytics, our risk parameters have to be good, that we ensure that we only target those which are high, which are suspect, not everyone. And we are hoping that more and more use of artificial intelligence, machine learning and all will refine our risk parameters more and more. On trade facilitation front, we are also working on some of the issues, how GSTR 3B can be made more trade friendly. We are proposing to provide some additional field to report more granular data of ITC reversal and reclaim. Presently, that is a problem that they are not able to show it upfront, and we want to show it upfront so that then we can have a better matching between GSTR 2B and 3B. In order to curb the menace of fake invoicing, a functionality has been introduced from end of last month, from end of June, to alert those taxpayers whose returns show a mismatch between the figures declared in GSTR 1 and GSTR 3B beyond a certain threshold. As of now, it is kept at 25 lakh and 25% and 20%. In case they are unable to explain the match within a given time frame, the time given is 7 days, the differential amount will be liable to be recovered. And as I said, we are going to follow a similar approach for mismatch in the figures between GSTR 2B and 3B, and we are working on this aspect. During my interaction, I also had an interaction in FICCI on 3rd July, and there was a very interesting suggestion that came from some of the taxpayers that presently we have given an unlimited authority to a registrant to issue tax invoices. They say this almost tantamounts to giving them a blank check. And they have suggested that administration should consider whether there should be a limit, there should be a linkage between the value of tax invoices allowed to be issued to a taxpayer and what is available in his ledger as ITC and cash. So there should be some proportionate linkage between what is the value of invoices he can issue and what he has in his ledgers of ITC and cash. So this is something that we need to ponder about, and perhaps this can also help us to reach the goal that we are of having a balance between facilitation and compliance. We are also looking at expanding the tax base of genuine taxpayers, and for this, data triangulation with CBDT and other relevant databases is being proposed, being attempted. We also are proposing to have sustained campaign, involve trade associations, have non-intrusive IT-driven surveys, so that we more and more reach out to those who are out of GST, tell them what are the advantages of GST and why they should join this, chain of GST. We are also aware that taxpayers are expecting more simplification. There is a large bucket list for the rate rationalization, addressing the issue of inverted duty structure in certain sectors, unblocking input tax credit on items on which ITC is currently not allowed, particularly in the real estate sector, which is construction, which is used for supply of businesses. Then there is perennial expectation when the petroleum products would be brought under GST. There is a pain point regarding deemed supply and cross-charge versus ISD issues that Pratik also alluded to. So most of these issues are very difficult. Some we are trying to look at them in near term, but many of them being difficult, requiring larger consensus, that has to be seen in a medium to long term as to how do we reach what the expectations of the taxpayers are. But at the end of the day, it is important to recognize that taxpayers and consumers are two of our most stakeholders, important stakeholders, along with the government in the GST system. And whatever we do, it must continue to address the concerns of these stakeholders, and we must endeavor to continue to make GST experience more and more positive and beneficial. And I am very sure that this partnership that we have with trade will continue to take this process forward. Thank you very much for listening to me.
Thank you very much, sir, for your remarkable keynote address. I'm sure all of us present here are highly benefited by the same. I now, with due respect, invite Mr. Vineet Agarwal, Senior EVP and Group Head, Taxation and Ethics, JSW Group, and Co-Chair, National Council on Direct Taxes, ASSOCHAM, to render the concluding remarks. Let's welcome him on the dais.
Honorable Shashank Priya, sir, Madam Aluwalia, Mr. Pratik Jain, and esteemed guests. Well, everything has been said, so I have to just conclude the remarks, and I think we have already missed the time. But few things to add from my side. Yes, it's true that GST it's a nascent stage. 6 years is not a long time for a legislation, but for a country of our size and a tax base of more than 1.4 crores we have, I think there are enough experiences with us to consider as an enough experience also. We all have seen GST from 2010, discussions at least, and how it grew. And yes, it required a political will to convert it into reality, which happened on 1st July 2017. And we heralded on a new era where 17 taxes were subsumed. Of course, we keep on saying this number of 17. Most of us might not have been dealing with these 17 taxes because they were in different fields. But whatever taxes we were, all of us are most of us in this house are professionals per se, because either professionals as practitioners or corporate, in the corporate world like me, who have been bearing the good and bad every day. So for us, it was really a promise of life, easy life. And yes, with 6 years, we can say, yes, life has become easier. So sir, thank you for that. Yeah, life has become really easier. As a consumer, yes, life has become cheaper also, cost of life. So, but, some good, some bad. I can't see the cheer which was there last year and the cheer which is there this year. Between 5th and 6th year, sir, the things have changed a bit. Why it has been changed? In the first 2 or 3 years, which is my understanding because I have been associated, first few years, a good leeway was given by the department to make the things attractive. Probably some long rope was given. Some bad sheeps probably misused it. And I say 18,000 is really a worrisome number that these kind of fake registrations have been found. But if you see in the larger context, out of 1.4 crore is a very small number. In a country of 140 crore people, it's a very small number. But to catch those 18,000 black sheeps, can we throw the 1.4 crore taxpayer to an atmosphere of distrust which existed prior to 1st July? What has happened now? I mean, I can share my experience. Every month, some team is sitting in your premise, one thing or other. GST was supposed to be a tax administration to be monitored and controlled through technology, artificial intelligence, and system-driven surveillance. Each and every information was supposed, this is a compliance-heavy taxation regime, and of course it should have been. If you don't want people physically in your office, you have to provide data electronically to them so that they can monitor. So one side is over. The second side, still the mentality has not changed. When something which could have been verified from the system, you find 4 people sitting in your office whole day to verify the same thing and asking you the same data which is already available in their system. So probably some mindset has not changed on this side, some mindset has not changed on that side also. So we have people who have carried over legacy of fake billing, fake invoicing, all those Kalba Devi or Bada Bazaar of Calcutta. But then the mindset of the officers ready to enter your premise has also not changed. I think we need a review and from both sides, and let's reignite and restart the thought process, which has started. And sir, I will start from actually the purpose of concluding remarks is to just conclude what has been stated from big to last to initiate to last end. But I'll go backwards, sir. The last few paragraphs or yours were actually encouraging that now we are using big data analysis for identifying the defaulters, and that should be the first thing in the GST investigation regime, that this should have been done rather than getting into physical verification, physical threatening. Yes, small MSMEs do not have staff to cater to the need of ever increasing physical investigation, but even the large corporates do not have, sir, because the compliance itself is so heavy that if a team comes to your office and sits for 2 days, there is enough chances of defaulting 1 or 2nd return, because every day we are filing 1 return either for GST, for income tax, for all this compliance, audit, transfer pricing. Hundreds of compliances are there, corporate compliances are there, and they are the same teams. And then somebody asks you to prepare a state-wise balance sheet, which is unheard. We never prepare, sir, we never prepare it. And you ask us to prepare a balance sheet. I mean, for a branch, for a company like me, if there is a branch in Calcutta and you say you prepare a balance sheet for Calcutta, how can I? I do not maintain separate accounts. And I think everybody is nodding head here. There's the same thing. So one should understand the trade realities also. We are not used to preparing separate balance sheets. Yes, we are providing data, and that data can probably be compared, calculated, because we do not maintain accounts between me and my branch. We are the same parties, and yes, that understanding is lost. I was sitting with an officer in Odisha, and he asked me, how can your Odisha branch provide service to your head office? I said, your Schedule 1 says that. And then somebody last week came to my office in Mumbai, say, why are you not charging for services provided to Odisha. I said, but please give me a notice, I'll produce it to Odisha officer. Somebody says you cross-charge, somebody says you don't cross-charge. So where should we do? What should we do? So there should be some clarity, sir. Unfortunately, what's happening, the different estimate, I mean, now we are facing multiple administrations. And at some point of time, it has to conclude. This is not complaint, but this is a suggestion that yes, there was one administration. All of us were told that there will be one administration for one GST number. But can somebody tell how many administrations we are catering to? We have state, we have central GST, then they have some preventive sections which comes, then there is an audit, and now we have started hearing DG audit also directly approaching the teams, local audit, DG audit, DGGI, and DGGI multiple offices. Somebody said, sir, a DGGI Kolkata office coming to Maharashtra or Bangalore, and then local DGGI coming to same office for some other issue. And then they started asking, each other's asking different issues. So probably we should be assigned to, there's no denial that all these agencies are doing good work and they are detecting division. But at least one authority investigating one case. There should be some coordination between state authorities and central authorities, and dare I say, some coordination between the central authorities and central authorities also. The local commissionerate does not know what the other divisions are doing. So probably these are pain points. Yes, I'm not saying in the larger paraphernalia, if I say 100% GST, these pain points are maybe less than 1%. But pain is sometimes become much bigger than the benefits which we have got. So if department is hearing cries, these are only 1% problems. And for that, larger 100% benefits are being missed in this crowd. So thank you, sir. Benefits, everybody knows, yes, average rate, and sir, this is the news for me that it has, the average rate has, or the revenue neutral rate has come down to 11%, and that's a good signal, and probably as a consumer, I will expect now that further, maybe rates on services tax, services may come down, because that's the only rate which has gone up after the GST, and that is basically the only rate in some cases which are the input credit is denied, probably insurance and all those things. So if the rates come down, probably as an industry also we would support, because that adds to the cost. It has become simplified, yes, I will say, because those who have handled those era of excise, service tax and VAT and octroi and entry tax, the legacy cases, life is simple for that matter, and if we continue to comply, life remains simpler. Logistics cost, if you ask from me as an industry, what is the hero of GST? Logistics is one of them. Those long queues have gone, those barriers have gone, but small meannesses come in. Those e-way bills and the time limits, suddenly you get a phone call that your truck has been, because the driver missed some route or something, or he took an off route because our road was not bad, so he entered other state, and the other state says, okay, you are not supposed to travel through me. So probably some solution for that, or some grace period, if sir, it can be provided. Probably, it's not a big menace, but certainly these are small things which makes life easier. I think dispute resolution, now everybody is looking at the government when those tribunals will come in, because everybody now has already blocked this 20%, and we are just waiting those if the tribunals come in and we get some justice somewhere, because there are certain litigative, 6 years is a long time. So now a lot of litigations have actually graduated to tribunal, and I think we are burdening high courts again and again with writ petitions, and that's again a costly affair for us. So if they come early. So thank you all for joining this session, and we will be having more enlightening session. Sir is going to continue for the next session, and we'll have more answers from him, and probably we will be able to give more feedback and honest feedback. And I request everybody to rather focusing on your individual issues if you have larger issues to address here, because these kind of conferences are not grievance settling mechanism, but for basically giving a collective feedback of the industry, and one thing we can always say that GST is a regime where you are being heard. All of us are being heard, and 50 GST council meetings, and every meeting coming out with a solution is a solution that yes, this regime is actually listening to us, and we are feeling that we are empowered and participative in nature. Thank you all. Thank you very much.
Thank you, Mr. Agarwal, for summarizing the session. With this, we conclude the inaugural session. Thank you, Ms. Pooja Ahluwalia and Mr. Vineet Agarwal, for joining us for the inaugural session. Thank you so much. And I request Mr. Shashank Priya and Mr. Prateek Jain to please stay back for our next session. And before we start the panel discussion, we request the esteemed dignitaries to please come together for a group photograph. We now move on to our panel discussion on next big ideas on GST. This session will be chaired by Mr. Shashank Priya and will be moderated by Mr. Prateek Jain. Joining them on stage are esteemed co-panelists, Mr. Manish Kumar Sinha, CEO, Goods and Services Tax Network. Can we all please welcome Mr. Manish Kumar Sinha on the stage? A very warm welcome to you, sir. Mr. Varun Raj Khanna, Senior Vice President and Head of Indirect Tax, Bharti Airtel. A hearty welcome to you, sir. Mr. Shivam Mehta, Executive Partner, Lakshmi Kumaran and Sridharan. A very warm welcome to you, sir. And I now request Mr. Prateek Jain to formally welcome Mr. Manish Kumar Sinha with a bouquet. Mr. Manish Kumar Sinha, CEO, Goods and Services Tax Network. Kindly keep the applause going as we welcome him. Thank you very much. And I now hand over the session to esteemed session chair and session moderator. Over to you, sir.
Thank you. Good morning again. Time is short and we have a lot of things to cover, right? So I'll straight away go to the questions. You've all been introduced to the panel. I'll straight away go to the question. This panel is about what are the big ideas of GST. So we're not going to discuss industry-specific issues. We're not going to discuss the procedure, the process, and the smaller things, which of course, as Vineet was saying, you know, it's 1% which keeps troubling us. Here the idea is to talk about what's the future of GST, what big can we do, right? So I'll just start with where Mr. Shashank Priya left, and I'll come to Mr. Manish Sinha directly, is on GST and network, the kind of data. The whole world is looking at our infrastructure with great amount of amazement, clearly. I mean, when I speak to my clients across the globe, they say that how has India achieved this? 1.4 crore people filing returns to the system, billions of invoices getting tracked, movement of goods getting tracked, that, you know, you have as a country, what you have achieved in terms of digital ecosystem is a miracle. It's like, you know, like your UPI system perhaps could be one sort of comparison, which again the whole world is looking at with amazement. I mean, you travel to Europe and other countries, you see that you don't have this kind of system, right, which exists in India. But sir, my question is, what next? So we have been talking about the wealth of data that you have. And at the same time, there have been discussions about vendor ratings. Can we have some CIBIL kind of ratings? Can we do a taxpayer segmentation to say high risk, medium risk, low risk? The low risk, you know, you can have a different administration, faster refunds, lesser scrutiny. I mean, Vineet was talking about, you know, so many people coming to your office. It's like, can we do something, sir, based on this data to say, you're a good taxpayer, don't need to worry too much. You are not so good, so either you get your act together or we will sort of put more restrictions, more audits, more scrutiny on you. Is that a possibility in the near future?
Well, in terms of technology, it is feasible. Now, as far as policy is concerned, Shashank Priya sir is better placed to answer, but I think circumstances and overall direction of GST would indicate that that is the direction in which we are moving. Because on one hand, you have a problem of fake dealers. On the other hand, you have a large segment of industry which is compliant, which is growing, which is reaping benefits of GST and would like to be treated differently. So differential treatment is something I'm quite sure will come into play in one form or the other. I don't think risk is a good word to use here because industry doesn't like the word risk. So maybe some other form of compliance rating for which a section already exists in GST law will come into play. So that's a possibility which certainly exists. As far as data is concerned, government is well aware of the richness of data which is there in GST. GST numbers which are released on 1st of every month have now been widely accepted as the best high frequency indicator of economic activity. Going forward, more data will be placed in public domain. I'm quite sure about that. There is a committee being headed by honorable member in this regard, and eventually some decision will get taken by that committee and will get implemented. So you will get to see more perhaps geography and industry specific data which can come out of GST movement related data. So these are all possibilities which exist, and it is not that government is not aware. Government is aware. As far as I am concerned, I'll say technology will empower and implement the decision for sure.
Thank you, sir. And I mean, not a question, sir, you, but the issue that I asked here, rating of vendors. There is a provision in the law. There is precedent like a CIBIL rating by banks, etc. I know there are data privacy issues and so on, but in this forum, I'll request the government to kind of look at that, because that will simplify the matter. Because, you know, and again, Vineet was talking about this, that black sheeps are there, but a large part of industry is compliant and they want to be compliant. And they don't want to deal with vendors who may be at high risk. I can put my systems and control and processes in that manner. So if something can be done, sir, we'll welcome that sort of decision.
Pratik, on this issue, we have been having internal discussion, and Manish has been part of that. So there is a little bit of a difference between CIBIL system and what we are looking at. CIBIL, it is a private thing, you know, only bank would get to know. Here, what is being proposed is in public, I tar somebody with a color, you know, somebody is green, somebody is red, somebody is amber. So not only it has privacy issues, it can also have issues regarding, you know, what kind of legal liabilities can arise, how risk parameters can keep, based on different risk parameters, how somebody who was green would become red or will gain to amber, or vice versa. So that's why a more sort of a neutral approach that is being followed is that, you know, how your taxpayers are behaving, what is the number of returns that they have filed, and those data is available. So that's another way for a recipient, for a potentially a new buyer, when he's negotiating with the seller, he can look at his tax behavior, which is already available in public domain. But we have been discussing, but there is certain, you know, elements that makes us uneasy.
So just carrying on, sir, one other suggestion could be, and if there's more debate required on this one, that at least for the tax administration part of it, if you circulate that rating amongst the government, you know, CGST, SGST authorities, and say, these are my high-risk taxpayers, and therefore you focus on them, and perhaps these are, so I'm saying that if you don't make it public, at least within the tax administration, if something can be done, and maybe it's already being done.
This is already being done, you know, whatever audit units we pick up, or registration, as I mentioned, physical verification, all that is being done on risk analysis basis. We don't do it randomly. We don't just pick up anybody, you know, it is based on risk.
And that's where, and maybe somebody can come in here if you have a comment, sir. We have seen large multinational, big companies, their registration being suspended for a week or so on small things. So, and it's difficult for me to kind of believe that those large companies, I'm talking about maybe top 10 Fortune 500 kind of companies, will be categorized as a high risk category. So I think there is some issues there perhaps we need to deal with. But sir, maybe I'll come back to you. And again, my question is on the data itself. Now, increasingly people are talking about it, governments across the globe are thinking about this. Can I use this data to provide some kind of value-added services to the taxpayers? So one specific point was that your e-invoices, if the JSON format of that is available to the buyer, and it can be downloaded, let's say on T1 basis, can they use that directly and account for it rather than making an entry there? So that could be one way of looking at it. Other suggestion which came up, and this is all part of our document which we have today released, we'll give you a copy as well, that can some kind of dashboard be there, where you provide analytics. One is for that particular company specific, that okay, how much credit have you been claiming, what are the issues, state specific and so on. But maybe at a next step, one can look at industry-wide data to say, and of course, the data would have to be masked, but can it be provided at an industry-wide basis? You have so much of data that which raw materials is going from which place to another, and so on, but where the vehicles are moving, where the distribution is happening. So can that be looked at as a next stage to say, okay, GST has 6 years complete, now let us look at another 6 years and let us look at how we can provide more facilitation to the taxpayers?
Well, the answer is an affirmative yes, but please understand that taxpayer facilitation is slightly different than economic planning. What you are alluding to is that to assist the industry by making data available in helping the economy achieve greater efficiencies, as I already replied in my past question, that's something being looked at closely. And JSON download will come soon. We are working on it and it will come very soon. We also are integrating the GSTR1 data as a financial information provider on account aggregator platform. More platforms like that will come. RBI is apparently considering them, and we will enable technology for that. So for MSME, credits becoming available based on their GST activity and GST performance will be a reality very soon. So a lot of work is happening. Then within government, a lot of departments are now plugging into GST data to do their own analysis, to do their own benefits. PLIs can be linked with GST, subsidies can be linked with GST. So all of those things, those interlinkages are being worked on. It is not that we are not aware of what are the benefits of interlinking and what are the ways data can be used to bring better efficiency in economy. The work is going on, and I'm quite sure that you will be satisfied in a little while from now that many of the ideas which were spoken and discussed here have got implemented.
Thank you, sir. That's very encouraging. And as ASSOCHAM, we'll be happy to kind of participate in that process, sir. If there is a white paper which needs to be done as to what can be done with the data, and I'm sure that your office has already done that. And we keep thinking and we keep talking about this. Let's say if I'm setting up a steel manufacturing facility, I need to know where my raw material is going to come from, where these kind of factories are already there, where is my ecosystem, where is my distributor, and so on. And the kind of data, sir, you have, that the data can definitely be leveraged at some point in time for me to take that decision, that where should I set up my steel manufacturing facility. And that's the power of data that one is envisaging. So very encouraged, sir, by the comments that you made. And I think this is such a powerful idea for us to take it to the next level. So switching gears, so I'll come to you, and there is a lot of talk, and this is part of our paper which we have submitted as well. The next phase of legislation or legislative simplicity. So 2018, there was a law review committee which came up, which gave their suggestions, and some of the suggestions were quite interesting, encouraging, forward-looking, but many of them have not been accepted. So that's one part. For example, you mentioned about allowing the credit for construction. That was one of the suggestions that they made that for intermediary services, you should change the place of supply rules, make it recipient-based. That was another suggestion that they made. They also said that the whole concept of ISD should be given up because you already have a cross-charge and so on. And the larger question that I wanted to ask was on input tax credit liberalization. There are two issues that industry is facing. One is there are restrictions under 17(5) and other sections which prohibit certain credits, right? And obviously, sir, from a revenue standpoint, you have always every right to say, I don't want to allow it. I'm not questioning that. The question is, how much the government is gaining out of this? I was talking to Varun earlier and said, okay, what is your estimate of ineligible credit, etc.? And the number which came up in a large sort of corporate setup is something like 0.1% of my total tax is my ineligible credit, or thereabouts. So if you're talking about 1,50,000 crore collection, and we're talking about 150 crores of ineligible credit, is it really worth spending so much time of administration and the taxpayers to monitor whether it is employee related, whether it is CSR related, whether this is this or that? If that is possible, to liberalize, the industry would welcome it. If you think that this is not possible, the another suggestion that we have put in the paper is, why don't you come up with a scheme to say, you go ahead and claim 99% of your credit. 1% I'll assume towards this, and of course, proper studies can be done before that. But the sense that we have as industry group is that the time spent on determining what is eligible and what is not eligible is far more than the benefit that the government might have on some of these restrictions.
The way the world over, the input tax credit is linked to, what are the supplies you are making and what inputs you are using. So if we are saying everything that you have, we allow it to be used, then there is also the issue of exempted supplies and the reversals on that. So that would mean a fundamental change in the way we operate the input tax credit. There is simplicity.
Just to add, sir, on that, what I'm suggesting is that, of course, for the exempt supply, you will reverse the credit. No doubt about that. The question is more about the eligibility. Let's say employee-related expense is not allowed, like the negative list, like a cafeteria or let's say cabs, etc., that I provide to my employees. Those are the things that I'm referring to, sir. Of course, to the extent of exempt supply, you have to reverse. There's no issue on that.
So there, one challenge that I see is it's a good suggestion. It's not that it's very trade facilitative. But one of the challenge I see is the percentages would vary for different industry segments. And how do we come up with the right percentage? And will we always be grappling with representations that you have got it in this segment wrong, this segment is getting more? So that is another challenge that we have to be mindful of. And accuracy of these figures is difficult to achieve. So maybe a better route would be that, as you say, we look at what are the actual amounts involved. Somebody, yes, in one of the interactions, he said that block credit on establishments, it's about 60,000 crore is involved. So some of these amounts, what you are saying is worth studying and looking at. What is the actual implication? And based on that, we can take some informed decision going forward. So that's something that maybe going forward we can look at.
Thank you, sir. Just a related point on that was the whole issue of liquidity for the industry, sir. And this is one area where perhaps we have a little worse off compared to the previous regime, because today you have, for every state, you have a CGST, IGST and SGST balance. In the earlier regime, at least at a group entity level for service tax, I had one common credit. So, and we do understand, sir, that for the SGST part of it, it might be difficult for you to give a cross credit from one state to another and things like that. But at least at a CGST and IGST level, can we look at creating one pool? In other words, if I have a CGST input credit in Maharashtra, I can possibly use that against CGST output of Karnataka, for example. And I'm sure that when I asked Mr. Manish Sinha, he will say from a technology standpoint, he can enable that. I mean, that's not, I think, is a constraint. It's more about a policy decision that one needs to take. Can I create at least a common credit wallet for the CGST, central taxes to start with? Although one would argue that, it can be done for SGST as well, conceptually. But at least at this level can be done. That was the first thing which came up. The second thing came up is suppose it's not possible. Then can we allow the provision of refund of excess input credit? So in VAT regime, sir, most of the states allowed me a refund at the end of the year at my option. Either I can carry forward the credit or I can claim a refund. Can that be done? Today refund is only for exports, as you know. And third was, which is a little more, one would say a little more thought-provoking, is can I convert this into scripts? Tradable scripts say, I have 100 crores of credit, please come and audit. So long as certified that 100 crore is genuine, I can convert that into tradable script and sell in the market. So basically the theme is can I help the industry from a working capital standpoint? Because a lot of my credit, and most of the people sitting here would say, are stuck. I'm not able to use. If I'm, let's say, in a telecom company, I'm rolling out a network in one particular state, my revenue from that state might start three years from now, but I've made that investment today. I've incurred that GST today, which is a huge amount. So some of these things from a easing the liquidity for the industry is another suggestion that we had from a ITC standpoint.
This CGST having a common pool, we discussed it. It does look an attractive proposal, to start with. And one thing is that on cash part, we have already allowed that, that it can be transferred from one state account to the other. On input tax credit side, there would be challenges because one is the revenue implications of that for the central government also. Because if CGST becomes fungible, then we are also not sure how it will operate in the broader context of the revenues. And second is that it will also cause concern for the states, because if we have shifted, say, from West Bengal, the CGST has gone to Maharashtra, then that much of IGST payment can now be done through this CGST, which earlier might not have, since CGST was not allowed, then it might have been blocked, or that much might have been paid through cash, and that cash would have come to, as 50% share would have also gone to that state. So there'll be a lot of challenges if we look at having a common pool of CGST.
Sure, sir. But I mean, we in our mind, we have tried to analyze that, and I think that with maybe some numerical examples and so on, one can try and sort of explain that that how perhaps it can be done. I'm sure that there are challenges, sir, but there's against one suggestion that we would want.
One can always look at it in more granular detail, and most important is to work out what the implications of revenue is.
And coming to on this, and Varun, to you.
No, the other points that you mentioned about refund of capital goods or input tax credit over a period of time, or making them tradable scrips. This was very extensively discussed when the GST law was getting formulated, that whether we should allow refund or not. And as you know, in VAT it was allowed, but in the central excise and GST regime it was never allowed. And the considered conclusion was that it is better not to allow. And now with the environment that we have, where there is so much of fake registrants going on, so there'll be even more caution now to see whether it can be done. So if the compliance environment improves considerably in times to come, maybe that would be the time to talk about it. And tradable scripts is again, I think, of course, in advance licenses, that tradability is there. But here again, it is a very difficult thing to say that I am completely moving away from the principle that input tax credit is to be used for supplies which are linked to the input tax, because some of this is going away from the fundamental tenets of GST. So we have to consider it carefully from that point of view.
Absolutely, sir. Absolutely. I just want to bring to your notice that there are countries like Australia where even the excess income tax that you pay, you can offset against your GST liability. I'm just saying that there are countries who have tried to achieve that, and as a country, sir, we want to take it to the next level. I think at least start discussing those. It might still take few years before it is implemented, but it's important, sir, to bring that to the table. And coming to you, Varun, from an industry standpoint, you have been discussing that, hearing the discussion, Mr. Manishana and Shashank Priya as well, about ITC, about, what kind of automation further we can do on GST and so on. What is your point of view, particularly on the issue of ITC, and any other point that you want to say from a big idea perspective?
Thanks, Pradeep. I think a couple of ideas come to mind, and I'll try to be as agnostic from an industry perspective as I can, because we're talking about GST as a whole and not one particular industry. I think there are two thoughts that come to mind. One you tabled saying, we've had 6 years, and it'll come, unfortunately, a lot of these things will come down to Manish sir, because he's got the data, he's the custodian of data. What is the extent of ineligibility under various subsections of 17.5? The reason I say this, or 17 is blocked credit. There are some other examples of reversal of credit. Industry is saying all this activity is actually a manual exercise. GST came in with the concept of IT enablement, automation. Most of us, at least the people in this room, I suspect will not be part of the 18,000 that Shashank sir mentioned are physically not there, hopefully. For us, automation is the key. That's how we can actually comply better. If the dollar value of these, every reversal is a manual exercise. I need to have a team which I can't do it through the ERP. Right? To what extent can we do away with this? Okay. A classic example is the 18.6. 18.6 is a manual exercise of computing the value on which tax is to be charged. I can't do it through my ERP saying this is the transaction value. I have to compare the transaction value with a deemed value and then charge tax on that deemed value. It's completely revenue neutral because my recipient gets the credit of that tax charged. The tax in the system remains the same. If I bought a capital good for 100, the total tax in the life cycle of that capital good remains 18. It can go through 3 hands. Why can't we do it? Because this is a manual exercise. Wherever you have a manual exercise, there will be errors. There will be errors on the taxpayer side. There will be errors on the tax administrator's side. If there's something lost, stolen, destroyed, if there's a 13-seater versus a 12-seater vehicle, I'm allowed credit in one case and not in the other. How much of that is a dollar value for the government on a pan-India basis? I'm not talking about one industry. If it's not too much, or can we say that the government will be gracious enough to give this away in the interest of automation? We're not getting into, like Prateek, you rightly mentioned, we're not getting into the question of whether the government has a right to restrict credit. That's well enshrined, they have a right. Nobody's questioning that right at all. We're saying if the dollar value is not significant, real estate, absolutely block the credit. There's a policy decision taken. Unless that policy gets reversed, we're not saying works contract or real estate should be blocked. Okay? When I look at our group of companies, we have one company which has some element of real estate services. The credit blockage out there is in double digit, naturally speaking. But if you remove that one element, one large element, you've suddenly taken away 10 manual elements. Okay? Another manual element is RCM. It's easy for me to automate a forward charge because the invoice has GST mentioned in it. It goes into a recoverable code. Moment I don't have it, then I start questioning, is this invoice which hasn't come with a GST, is it subject to RCM or is it not subject to RCM? And there goes a manual exercise. I have somebody who is possibly a 20,000 per month employee who has been vested with the responsibility of determining, is this coming from a vendor who is not subject to tax at all because he's under the 20 lakh limit, or is it subject to RCM? And there are going to be errors. So government services is one classic example where you can begin from. It's revenue neutral for the most part. Again, data will come from Manish sir. What extent of RCM paid is not claimed as credit? If that's not significant, and the credit will be immediate, right? So it's that much cash less paid. Can we say government services will not be subject to RCM? It's just, please understand, this is not working capital. This is not revenue because the 99% of the companies will get a credit, but it does away with the manual exercise. It does away with the possibility of errors. That's my thought at the next stage.
So, sir, the proposition basically is what Varun is saying. If we do this analysis as to how much is an eligible credit today, let's say that is 100. Out of that, 90 is real estate. You said real estate can anything, take it out. The remaining 10, if that remaining 10 is not worthwhile either in terms of revenue you're collecting, the kind of effort that you're putting in, the kind of litigation the industry is facing, and the lack of automation that Varun pointed out, that I can't automate some of these things. Is it really a worthwhile thing for us to carry as a nation as we take the GST to the next level? That I think is the overall summary of this point. I'm happy to provide some more details. I mean, Manish sir can, as Varun said, that we will have the data. And if we don't have the data, we can try and estimate some and try and come up with some document to say, let us make these 5 services and then go to another 5. And then try and sort of see, like income tax, every expenditure for business purposes is allowed. Then you don't look at then this thing that, okay, whether this is related to employee or not, and so on. Maybe there is a time of convergence which has come as well.
No, I do not, at a principal level, I do not dispute it. This is something that we need to look at, and maybe if we are able to do a more, some data mining and see what is the implication of that. Maybe this is one area where with proper, analysis and data, we should look at how do we address that, because the points that you're making is very valid, that ERP and your automation system, and this is not going in sync with each other. RCM is a more difficult area, because RCM is being done for ease of compliance for some sectors. For imports, it is obviously that is the only way to do it. And in fact, while you are saying that you should look at RCM, there are demand from some other sectors that you should impose RCM. So I think if we keep the RCM door shut where it is, I mean, whatever little opening it has, only keep it at that and not open further. That itself, I think, would be a good thing. And reversing it seems challenging.
So I don't think Varun is trying to suggest that you don't have RCM, sir.
I think my idea was to say, can we look at some areas of RCM, for instance, government services, where we have a goods, where we have something like a transporter. We know that that sector perhaps is very non-compliant. It's easier. So my idea again, so this is merely to say on the manual side, what also it does is where you have 10 subsections of 17.5, which, I'll give you a classic example, something is lost, stolen, destroyed. That becomes a matter of subjectivity. It's not only the manual element, then the tax administration and the taxpayer decide to become creative on this. And as a nation, we are very creative. Okay? That leads to litigation. And I'm saying perhaps both are equally at fault. It's also the taxpayer who decides that, oh no, this is not lost actually. Okay? Then it's something lost, it's been put to use, and then something is destroyed. So it just opens up a Pandora's box. If the dollar value is not significant, if the dollar value is significant for real estate, we're saying, fine, there's one element, my manual element is restricted to one aspect. It's easier to focus efforts there.
Yeah, so on both ITC and on reverse charge, what you are saying basically is that keep narrowing the coverage to the extent that you
Absolutely.
can.
So I'm saying for RCM, for instance, if government services we say, because the government has nothing to gain. If there's a government enterprise who's not charging me tax, and the recipient is going to get the credit. Imports, absolutely, let's do the RCM at the time of import, it's well established. I don't think there's a problem on that. If there's a sector which there is a belief that we need to effectively tax that sector, but that tax sector is going to be non-compliant, like transport, fine. But can we look at a bigger ticket item? This is again, the next 6 years. This needn't happen in 6 months, but government services.
Sir, one other thought which was there, and I think would have come to your office as well. Can we allow ITC to be used against reverse charge RCM? I mean, RCM payment, right? Again, nothing from a advantage perspective, really from a cash flow standpoint, because there are companies who are paying RCM, then claiming a refund, right? And I see you smiling. I think the policy decision perhaps has been taken on this, but I'll just leave this point again with you.
I'm smiling because, I came into this service tax and a little late. So when I was a commissioner in Patna, first time when this was asked, and I said, yeah, why should it not be done? It seems very reasonable. So, but then when I talked to the TRU joint secretary, then he says, no, it goes against the very basic nature of, tax payment, that you can only use input tax credit, something that where you have used it for supplying of service. So here, since you have not used it upfront, you cannot do. So it's again, as I said, conceptual issue.
So which view should you hold now, Patna view or the Delhi view?
I mean, one has to sort of
But sir, internationally, just to kind of leave this, that internationally, most of the evolved places like Europe, they allow this. So there is precedence available. And of course, they have experience of VAT or GST. there is much, much more than what we have in that sense. So again, something to ponder, really.
No, I agree. I mean, it's something to really ponder because some of the things we take as very hard grained ideas, but yeah, it is something worth pondering.
Sir, we didn't ask you, or Varun claimed that you have all the data for ineligible, credit, or how much people are not claiming, etc. Sir, we just want to confirm that you have that data, or that's something readily available or can be analyzed.
No, please tell me, do you fill that data?
We
I
do.
have the data which you fill. So please go back to table 4 of GSTR 3B and see that whether this particular element is there as a separate row. If it is there as a separate row, it is with me.
Okay, great. So that is putting the ball back.
Sorry, just to, on the lighter vein, that's where I got the data from internally as well.
So
I went to that
fills-
same table and got it
he
fished
fills
out.
it up,
So
I'm sure.
if I have it, he has it for the country.
Okay, great. So shifting gears a bit, and we will just take few questions as well. But coming to Shivam, and there's one sort of document that we have submitted for your consideration, is our ideas around how do you reduce litigation. Because believe me, sir, that's a pain point number 1 today. We all agree on the structural issues and structural benefits, but the kind of disputes, there would not be a single company or representative sitting here who does not have some 100 notices at this point in time. When I say notice, it could be inquiry, it could be investigation, it could be show cause notice, it could be an order, and so on. So we have few suggestions. Of course, we will request you to kind of go through it, and maybe we can have a more elaborate discussion on behalf of ASSOCHAM with you. Like thinking, like, can we have settlement commission, for example, for GST? Can we look at one time, it's not a good word in our thing, let's say amnesty scheme for GST. The 6 years has gone by, let bygone be bygone, let's move forward. And we have done that for earlier excise and service tax and so on. We have talked about, should you have a triple AR or directly against AR, can you go to, should you allow you to go to court, and so on, right? So this is one area where we really would like the policymakers to see that how tax administration can be strengthened and how we can have more mechanism to reduce litigation. And in that context, Shivam, I wanted to ask you that in addition to some of the points that I have spoken about, it's already there. What are those 2-3 things which comes to your mind in terms of reduction of litigation?
Yeah, thanks, Pradeep. I think just to start with, before I address this, I have a couple of points on the status which you were talking about. So just that, like you said, we cannot flag the transaction as red, amber, and green, but can we talk about something as an AEO status? As in, we know some taxpayers are awarded monthly by the local jurisdiction as the highest taxpayer. Next month, they have been called by DGGI for some fake fraud cases. So if we can have, similar to what we have in customs as an AEO status, that these are the taxpayers who are genuine taxpayers. If there is a mistake, you have to relook on it instead of simply calling a tax head all the way to Odisha from Bank Bombay and all that, and just see whether if we can have that status. I understand the data privacy question, but that was something which I had in mind before I. And coming to tax frauds, I think 18,000 number, I was having a read in as to how it is happening internationally. In Europe, as per 2020 report, 90 billion pounds were tax fraud. If I compare with Indian rupees, I'm talking about 90 lakh crores. And still, we have those mature legislations handling it properly. In fact, recently in December 2022, sir, they have come up with the concept of real-time reporting. I'm sure you must be aware, but there are these changes in the EU itself, which they are asking all the member states to go into real-time reporting. When I read that, I compared with our section 38 of GST. I think last year we have been introduced that. It's a perfect section. If it is implemented properly, I think all these woes of tax fraud can be taken care of. Just wanted to check what is the progress there. Will I get a real-time report that these are the players who have not paid the tax? or there is a 3B1 differences. What is the status? I mean, because we are talking about big step, I think that's one of the biggest step to control that. So any inputs on that, sir?
See, you already have a provision of know your supplier on the portal.
Yes.
What we are doing is till a policy decision is taken, bring more and more information regarding the supplier on that page. Earlier you did not know the GSTR 3B filing status, now you know. You also now know that what percentage of liability he has discharged. So today you know whether all his invoices are tax paid or not. Reasonably well you know. So going forward, more and more of information in relation to the supplier will be brought on that page. And that's a precursor to rating. And if policy decision is taken, I will open that information by API, then you can create your own credit rating. See, credit rating by the government may be difficult, but what can be easy is to provide all the inputs using which credit rating can be done by the industry itself. So that is how I think we will progress. It's only my thought process. It is not a policy decision. So let me close with that disclaimer.
And just to add, sorry, it's a very touchy topic, as in most of the clients are facing that one of the supplier defaulted and I've been asked to come and appear and all that. Just to add there, I mean, I understand so far as goods fake invoices are concerned, I really appreciate the step of GPS tracking, which you have done with the transport vehicles. I mean, that has discouraged those small percentage of black sheeps. But when I look at services, I have really no clue. When the client asks me, Shivam, tell me, how do I prove that I have received the services and those were the genuine services, when his returns are filed using a fake credit and I am asked to reverse those services. So what should I tell them? I have really no answer. Because goods, I can tell them, okay, you identify your supplier if there is a GPS tagging, etc. So you are already discouraging them. But what about the service providers? Are we really trying to link their Aadhaar card, bank account? What is the government planning if you're talking about next 5 years in GST there? That's which, yes.
See, there are two aspects of it. One is, as I mentioned, that we are doing more risk-based verification, and we will be doing Aadhaar-based authentication of these high-risk registrants, whether they are in the goods side or in the services side. And wherever, even after that, if we find risk elements are involved, then they'll also be subject to physical verification. So we are trying to curb to the extent possible that at the registration stage itself, we are able to eliminate them. But one thing that I would like to bring to your notice and to this August audience also, that when we made this provision that you will be liable to reverse your credit if your supplier has not paid the tax, whole idea was that we only are not in charge of compliance. Each one of the buyers is also responsible for compliance. And you would take care that you would only deal in business with those that you know them well. If it is the first time, maybe you would take some precautions that if he has done something, then you can recover that amount from him. And trust me, I have talked to some of the bigger units, and when I asked them that, is it creating a problem that, you know, some supplier has not paid? He said, no, we take care that we only get it from good, trusted buyers. And if there are a new person who has come into their supply chain, they keep certain deposits that in case even if he does defaulting, then they have some cushion. So I think while we are trying our bit, the taxpayers also have to do a partnership, have to be in partnership with the administration to ensure that they also eliminate these suspect players.
One other thing which, Shivam, I think we did discuss about a completely different point on the doctrine of prospective
So
applicability.
I was coming to that.
Yes.
I mean, in fact, sir, now I think most of the MNCs have faced the issue of secondment. I think everybody in MNC have received those notices, or at least TGGI notices. while we were researching on the concept, we got to know there is something called as a doctrine of pro prospective overruling. What is that is basically it has evolved from American jurisprudence, used by the Indian courts also. I'm sure you must be aware. It's something which is very old, implemented by Indian courts way back in 1967, where they said that if, because of a Supreme Court ruling, which overturns the previous ruling, your fundamental rights are disruptive, that ruling will be prospective, not retrospective. Just to give you an example, there was a first case was I had a 500-acre land. Suddenly, court said that law under which you were entitled to get the land, you cannot have more than 50 acres. So your 450 acres can be taken back. Now, court said this is called as doctrine of prospective ruling. Whatever the transactions have happened between previous Supreme Court judgment and this judgment will remain as if they are valid, not void. But if I look at that way, it can be counterproductive also, because then I read a case very strange that I was paying cess under a mining rules. Supreme Court said that state government do not have the right to collect it and it has to be refunded back. But because of this doctrine of prospective ruling, you cannot claim for the past. So when I was reading these two judgments, I got confused. If I apply this universally, even a taxpayer, if succeeds in Supreme Court and we try to apply the same principle, it may be counterproductive. So what is the real solution? So when I was discussing with Pradeep yesterday, so we thought, why can't we have something like 11C in a central excise? If there was a general practice, and because of the practice I was not paying taxes, and subsequently Supreme Court or some court holds that, or it is held by way of a notification or something, that the tax was payable, government used to have power to give you a relief. And that section in excise, sir must be knowing, was widely used by the government to favor the industry. I can tell you there are more than 150 notifications which I have read, I have come across, wherein this power of government was used to grant the relief. Some of them, just to give you an example, if you talk about that soft serve judgment, I think most of you must have heard about it. In past, when you are selling this soft serve, this ice cream through a vending machine was not considered as manufacture. Subsequently, Supreme Court said it is manufacture. It was this section which came for relief for the taxpayers, wherein they introduced a notification saying that for the period from 1997 to 2001, no tax will be levied. Now, so VAT, I'm not sure, because I'm talking about, so sir, in fact, that's what I'm not saying this is there in every VAT legislation. I'm only looking at, because we're talking about reducing litigations, wherein particularly in the case of secondment, sir, we all know there was Supreme Court ruling saying the tax is not payable. Now, Supreme Court says tax is payable. So if we can have similar type of provisioning to give the relief. So, I mean, because this is going to give a very, very positive message to the investors also, that this is one country which really takes care of the 1.4 CR people who are registered. I mean, if there is something which was understood as a customary practice, see, for example, sir, Westinghouse judgment, it has, today, Economic Times says, there are so many investigations against auto parts manufacturer because of the Westinghouse. Today's news.
Shivam, just I think, you want to make a point on this? Or?
See, as far as this doctrine you are saying, please also know that there is a doctrine of unjust enrichment. You lawyers will quote that also.
Sir,
See,
I'm not asking the refund. I am asking for the relief for the past period.
Please understand. This is a general progression that litigation goes on right up to Supreme Court. Generally, 4 out of 5 cases you will win. 1 out of 5 government will win, then you will say, why don't we have a section 11C? Also at the budget time, you will say, why can the law be retrospectively amended? So I understand industry's need, but what I will say is that there is a bit of doctrine of restitution also which applies in taxation.
Sir, I agree.
We will have to live, and also this secondment issue, the judgment of Supreme Court applies to very specific set of circumstances where the employee-employer relationship between the foreign company and the person working in India was preserved. And it was very explicitly preserved in terms of how the payments were coming, the social security numbers were preserved. So there was a very clear set of circumstances. And in those set of circumstances, perhaps to say that there was no manpower supply will be a bit too excessive. So all I will say is that while you are doing creative tax planning, take your creativity to the level which perhaps law will be willing to live with.
I totally agree. Only one point which I was making is because this was a provision in excise, there has been a general practice. So let's move from secondment. In auto component, they were classifying a product under a particular chapter heading for ages because excise duty was same. They never knew there is a ruling existing saying it you are classified as a part.
So Shivan, I think this point, I guess, the larger points that we are making for both of your
yeah, so
considerations.
I'll move to the next point where we are, sure.
In fact, you know, earlier Pratik also mentioned about settlement commission. Now you are mentioning about 11C. All these were part of the Central Act. But as I mentioned to you that when we brought in GST, we had to sort of had extensive discussions on all these provisions. Settlement commission, we had extensive discussion on that. Composition was something that states were comfortable with, but settlement commission they were not comfortable with. Advanced ruling, you have an appellate authority. We had extensive discussion, but we could not reach an understanding. Similar is 11C, you know. But you have a point, it is worth again looking at it to see that in very, very special cases, genuine cases, whether we can provide some relief.
So one point, sir, is that on 11C, and I'll just conclude that we'll go to audience, there's a couple of questions. So today, let's say cross-charge. There is a burning issue whether salary is to be included in cross-charge or not. Most of the people are not including salaries. Most of us have advised people not to include salaries. Let's say tomorrow Supreme Court says after 3 years, 4 years, 5 years, no salary had to be included in cross-charge. You know, it will create a situation in industry which is not a normal understanding. Even government has not clarified. It's not as if, sir, you have clarified that salary has to be included. Nobody has clarified, right? So therefore, in those situations, something like 11C, at least the power. Now, how do you want to use that? Of course, council will decide to use it judiciously. But at least that power ought to be there. Because if you did not want to tax and court says that you have to tax, and it's matter pertaining to several years, it could just lead to more complication. That's a point.
Sir, one more suggestion on dispute resolution, if we can have something. Of course, amnesty and other things we have spoken about. I was reading how it is internationally done. So, though we have systems of audit and then appeal or order, etc., there they have set up something as a lok adalats. If I put it very simply for everybody to understand, there are certified mediators who sits and resolves the dispute. It's there in Australia, it's there in Canada, it's there in Europe also, you must be aware. So there is a certified mediator who will sit and decide. Mostly the issues which they take up is where earlier there was a problem, law is fairly settled, still the dispute is going on. So when we are looking at 6 years of GST, no tribunal in place, and limitation period starts, as in for 17-18, show cause notice can be issued till December 2023. That's a normal period of limitation. I'm not talking about fraud cases. If there is so much of backlog, can we think as a next big idea of having this alternate dispute resolution wherein a mediator sits and do a mediation between a taxpayer and the I can leave that here.
I think what we'll do is, sir, this is also part of our recommendations here. And I know that, sir, some of these things perhaps you'll not be able to immediately respond to. But the larger point was, can we have alternate dispute mechanism so that, there is a pre-consultation notice that we have talked about, this ombudsman we have talked about, arbitrators we have talked about. Let us see what internationally has worked, what has not worked, and try and sort of bring it here. But I'll just pause now and we only have a couple of minutes. Any questions, but please restrict your questions or comments only on big ideas, not on process, not on one particular return, not an industry-specific issue. If you have anything which you want to contribute to the discussion on what are the big ideas for GST, let us talk about that. Anybody? Yeah, Ritesh. Yeah. Okay, maybe we can give it here.
So only two quick points. This is the discussion that we had. Multiplicity of proceedings is really creating a big challenge. One, somebody spoke about AEO. Can we have some concept like an LUT concept where SECs are divided between states? At least I won't have multiplicity, because the problem is audit from multiple states, audit investigation from multiple states is really creating a big hassle. Nobody minds going through it, but a single point, on interpretation, so different interpretation issues, etc., will stop. That could be one thought. Second is a issue where, the supplier mismatch, vendor supplier mismatch. We don't know tomorrow if the tax has already been recovered from the supplier. Today I have paid reverse the credit. I have no clue about what investigation has happened against the supplier. There are situations where clients are coming, let me pay through DRC 03. I will withhold this money. There is no facilitation where I can go and pay through DRC 03 and save my credit. I already withhold this money. So can that be unable to say, I will go and pay and let me at least, because I can't give that money to him. He would have not paid the tax for multiple recipients, right? So can there be a facilitation where if he doesn't pay, let me go and deposit that money on his behalf so that my credit is secured? I might have already withheld that money. This was the 2 points that I wanted to quickly make.
Yes, can you give the mic there, please? We'll just have one question.
Thank you, Pratik, for giving me this opportunity. I'm Tajinder. I'm representing Make My Trip.
Okay, sir, let him ask the question, then we'll answer it. Yeah.
So I really appreciate Shashank sir. He remembered our concerns discussed in the last session, and we look forward to some solution on the e-commerce side that you have already said. But I am not repeating that thing again here. On this fake registrations and the frauds on the input side, I remember that this suggestion with respect to allowing assessee to raise invoices limited to the credit or the cash available. I think if this, although I know it's a very crude idea and it needs to be evaluated and there has to be a larger consultation on this, because this will involve a lot of working capital issues. I was thinking that in the entire discussion, maybe we can look at reshuffling the timing of GSTR1 with GSTR3B, because we know that nobody can take a credit if it is not reflecting in 2B and it is linked to GSTR1. And similarly, the suggestion of allowing only the invoices which is supported by the cash and the credit, I think if we reshuffle GSTR1 with GSTR3B, that can really help, because if GSTR1 is filed after taxes has already been paid, then all the 2B transaction would be supported by cash already paid. So maybe you can look at this suggestion. Second suggestion is on, basically it's not a suggestion, it's a request. When we are looking at the dispute resolution mechanism, there is one typical situation which has actually arisen because of the structure of the GST with the states and federal taxes being separate. We have advanced ruling, but advanced ruling apply to a particular state, and we have seen in the past that different advanced ruling of different states are giving contradictory positions. Similarly, in the investigations also, assessing officers are taking different positions. So if I have, so similar to, because we know multiple states are raising audit requests and notices, and they ask for pan-India data. There is no problem in giving pan-India data to a particular state, because if I have prepared the pan-India data, I can share it to anybody. That's not an additional work for me. The problem is when on the same pan-India data, multiple states ask tax, and they say this tax should have been paid in my state. Even if I agree with one state, okay, if you are saying that it is payable in your state, but I have paid in another state, there is no mechanism. There is provision available, but there is no mechanism to set up that credit. So that is my point, where we should have some sort of a interstate or multiple states dispute resolution where one ruling applies to both the state and then it's automatic adjustment.
Sir, would you like to comment? Let's close that with the comment. We are running out of time actually. So we'll.
So the point that was raised about audit, multiple audits, different administrations asking same question. So there is a audit, guide that has been circulated amongst the tax administrations, where there are some suggestions have been made how if you do a thematic audit, then the states and the center should come together and take up one theme, like say for now insurance if they are doing, then all of them should take up insurance audit. They should come to certain common understanding as to what are the issues that they will look at. At the end of the audit, they will come forward and share their findings and then come to a certain common conclusion. So that is an effort, and I hope that it works well, but we are trying to work in that direction, because original one thinking was also that you can have just audit the headquarters of a big company where the concerned states can also be involved. But that doesn't seem to be a workable proposition, because there is hesitation and reservation on that. So we have to see how this audit, some kind of a complementary or some kind of a coordinated approach, how much it works. Allowed to pay on behalf of defaulter, again there was some discussion at the original design stage of the GST that there should be an option given for the recipient to pay tax on behalf of the supplier. But the problem is that we are not paying tax, accounting for invoice wise and paying the tax. It is one tax at the end of the month based on an aggregation. So this would mean having a completely redoing the system to say, out of so many invoices that has been issued by a supplier, for so many taxes have been paid, and I take into account, irrespective of the fact whether he has paid the tax on other supplies. So those are the complications and system related issues that will arise, and maybe for a small portion of such incidents, having a complicated system may not be very desirable. So that's how it was not initially also approved, and I'm not sure whether now when the systems are settling, whether we can look at something like that. And dispute settlement, various types of options, well, that's something that one can look at and see how best we can arrive at a more painless system of dispute settlement. And reshuffling GSTR1 and GSTR3B, I'm not very sure whether it is something which is a good idea, because idea is that a supplier's details are being given to the recipient, and then he confirms that yes, he has received those, and then accordingly he takes input tax credit. So once he has already paid the tax, and then if he is looking at the details of the supplier, I don't know what further value it will bring.
Just one point, like I understand we can't do it for everybody that I pay tax for the supplier, but some particular categories, if class of persons, if that option can be given subject to system configurations, say manpower supplier, many times it happens he's not paying the provident fund, he's not paying the taxes, but my factory cannot run without it. So I necessarily have to give that money to him knowing he can be a defaulter. So otherwise, he is not going to pay. So what we do is actually, many I've heard from the companies also, we pay to the employees, workers directly. But if I can get the facility of paying his taxes, at least that can be, for some class, if we can introduce that, what Ritesh said, maybe that can be a big relief, if you can think on those.
I guess we'll need to end this. I'll not request you to respond to this. But one last, this switching GSTR 1 and 3B, do you think that it is something which is desirable? I mean,
No, it is not a question of desirable. It is not a value-added tax thereafter. Plain and simple. If you go into it, what is a value-added tax? The credit of the previous supply must be available to you, and then you pay the tax which is differential. How do you start T0? At the point of switching, nobody will have the credit. And economy will have to undergo that much of cash surplus tax payment at least at point of T0. So it is an unworkable idea.
Great, sir. Thank you. Thanks a lot. Let me thank again Mr. Shashank Priya, Mr. Manish Sinha, Varun, Shivam for this engaging discussion. I know that we are slightly out of time, but this is because of the previous session, not because of that I have, I have taken more time, because I was constantly watching my clock. So thanks a lot, and look forward to the next session.
Thank you so much.
A round of applause for the respected distinguished panelists. Thank you very much for an insightful conversation on the future of GST. Ladies and gentlemen, as we are running behind schedule, so we'll take a short 15-minute tea break. The same is organized outside this hall. We request all of you to kindly reassemble at sharp 12:50 p.m. for our next session. Thank you so much. Enjoy the tea and coffee break. Welcome back, ladies and gentlemen. After a refreshing tea break, let's kickstart the next panel discussion on key policy issues. Please join me in welcoming session moderator, Mr. Rajat Bose, partner, Shardul Amarchand Mangaldas and Company. Can we all please welcome Mr. Rajat Bose on the stage? A very warm welcome to you, sir. I urge you to moderate the session and give me a minute as I invite the key speakers. Joining him on the stage are Mr. Vineet Agarwal, Senior EVP and Group Head Taxation and Ethics, JSW Group. He was with us in the inaugural session. Can we welcome him? Mr. Ritesh Kanodia, Co-Chairman, National Council on Indirect Taxes, ASSOCHAM, and partner, Otis Consulting LLP. A very warm welcome to you, sir. Kindly keep the applause going as they join me on stage. Mr. Sudipta Bhattacharjee, partner, Indirect Taxes, Khaitan and Company. A hearty welcome to you, sir. Once again, a very warm welcome to all the esteemed and distinguished panelists, and I now hand over to the session moderator, Mr. Rajat Bose. Sir.
Thank you. Thank you so much. First of all, I warmly welcome all the delegates for this, for this conclave, and I hope that we have a very engaging and fruitful discussion on policy issues under GST. So I think, first of all, I'll start with Mr. Agarwal, and in about a minute, can you please tell us about your experience in the last 6 years of GST in India?
I think I've spoken a lot this morning. No, my views look like aggressive, but being the only industry representative in all these kind of discussions, so it is my duty, but I represent all of you, to at least speak what we are feeling. Yes, there are goody things. We keep on speaking all of them. You say, life is good, but normally it happens. Whenever you are in pain, you cry. You cry to your parents, you cry to whomsoever it is. And it's not that entire life is full of cries, but whenever you have pain, you cry. And that's our duty right now in such conferences, such feedback sessions, and we really find very little time. So these are the modes where we should actually convey the pain points, and that's why we are here. So coming to 6 years of GST, let's all of us believe, and in fact, I'm talking on behalf of taxpayers. Last year, a similar conference was here, and at that time, we had a government representative also with us. Probably he's in the next session. And there was discussion on cross-charge. And a lot of discussion was happening between a professional from a big top law firm and with him, that yes, it's a work in progress, it's a lot of under discussion and blah, blah, blah. And finally, my views were asked, and I simply said, it might be in work in progress for you, both of you, but as a taxpayer, it's a continuous pain for me. So it is a pain of 5 years. Now 1 more year has been added to that. So now it's 6 years pain versus work in progress. So whom do you want to listen? I'll say you have to ultimately listen to me only, because I am the final person who is paying tax, who is the assessee in your case. Unfortunately, that's not happening. Coming back to 6 years of GST, I'll say it's not 6 years of GST, it is 13 years of GST. We started first discussion in 2010. 6 years, it went on round rolling. And I recall one of ASSOCHAM conferences, one CBIC chairman was there. who was actually driving force behind this entire concept of GST, and how he actually explained how this IGST came in as a rescue to sort out the difference between center and states, how the credit will flow across the border. Okay, but when those discussions were happening and when finally this NDA government came and Mr. Jaitley started pushing for GST, and finally it saw the day light of the day on 1st of July 2017. We never thought power of one section, that was section 17, which will make the entire difference. We thought goods and services tax, actually we put too much reliance on two words. One is and, okay, one is and, inverted commas, and second is continuous flow of credit. Unfortunately, both the things are not happening. It is not goods and service tax, it has become goods or service tax. When both the things were, all these laws were merging, actually the purpose was that there will be no differentiation between goods and service. They will be identical. And they wanted to bring, because earlier goods were being taxed by states, of course manufacturing was being taxed by central excise, and services were entirely in the domain of center. Fine, so when you are merging them, that artificial difference between goods and services should have gone. But that remained. Even now Supreme Court has put a stamp on that yes, you cannot claim refund on services in the case of inverted duty structure. I don't know why. If in my office I bring something using a truck, so I'll get credit for that something which has been brought on truck, but when I pay freight, I'll not get refund of that. I mean, how does it make a difference? Should I get that on CFR basis? That's the best thing then. Okay. Use your structure and you will get the credit. You get it on CFR basis, you will get the credit. You decide, okay, I'll choose a transporter. Your credit is denied. Effectively denied if you're not getting refund. So that is one differentiation. And second is continuous flow of credit. Section 17, 5. Everybody knows now, no need to speak further. You can't take this, you can't take that. And once that monster is out, once you give a denial power to an authority, that power always increases by way of interpretations. It should have been an enabling clause. Whatever were there as enabling clause, now we are told that Schedule 1 was supposed to be an enabling clause, where even if the related parties are not charging GST, the credit should be flown. So they said, okay, that will become chargeable, so that credit flows. Now they're saying this cross-charge business started from there only, right? Absolutely. Okay. That Schedule 1 was not to force you to charge tax. It was to enable the credit should flow from one state to other in the related parties so that it's not blocked. The blocked credit concept should not have been there in GST, but we are living with it, right? So I can keep speaking, okay, during the day we'll do, but that's my experience. Sure. Of course, life has become simpler as far as compliances are concerned, dealing with authorities are concerned. Now, let's see in the next 2 years, last 1 year, slightly the opinion has changed. Next 2 years, let's see whether are we dealing with as number of authorities as we thought of, or they are ever increasing numbers. Thank you.
Thank you. Thank you, Mr. Gowda. So, Ritesh, over to you now. What are your thoughts the last 6 years of GST?
So let me start with a very positive statement. When GST was introduced in 2017, many of my professional colleagues came and told me, we have no career left. I must say that I would insist everybody to rethink on GST litigation as a career. So, what we are facing today, initial 2-3 years, there were a lot of relaxations, etc. And suddenly, the government has changed its entire mindset of relaxation. And like, the credit mismatch 283B, which was never supposed to be there in terms of, let's say 2 years, forget 19 onward. 17, 18, 18, 19, they said, okay, forget about credit matching. Everybody thought, yes, there is a relaxation. Suddenly, you have notices. Multiplicity of proceedings, a client receiving, let's say registering 30 states, receiving 10 notices every day, so 300 notices, let's say, every month. How do you handle such kind of a volume? This is not about interpretation. We can handle interpretation, we can handle investigation, we can handle appearances before authorities, but when you have to run across to 30 states, appear before 30 different authorities, half of whom do not understand the law, have to explain them interpretations which they would never even, They can't even think of like explaining services to the SGST authorities. And each one of them then taking a different viewpoint on what the provision of law should be is a nightmare. And the problem is, what will it will culminate into? It will culminate into a 1A, a 1, and on the same issue, you would have 30 notices, maybe making different points, pre-deposit 30%. I think that's where everybody is worried about. Okay, there is an issue, let's fight it out as a common authority, but today there is absolutely no commonality. We are not talking about one GST, we are talking about as many states, as many GST. That's what my experience has been.
Thank you, Ritesh. So, Shudita, Ritesh spoke about multiplicity of proceedings. Now, we've seen many times that some issue is being investigated by the DGGI, and then suddenly you have an audit of the state GST or the central GST audit department, and they pick up the same issue. And then we have the anti-evasion or investigative wing also picking up the same issue, so you end up giving the same information again and again to the department. Now, from a policy standpoint, how do you see this going forward? In the sense, do you think that there is a need for the government to take out some kind of a policy where the assessees are not harassed again and again by different agencies of the GST department by asking the same questions?
Certainly, Rajat, I think there is no doubt on that there is an intervention needed. See, the SSCs, I think the first such set of circumstances arose about 2 years back. SSCs approached the high courts on the basis of we have a section 6(2)(b), which tries to prevent this kind of multiplicity of proceedings. But the way the courts have interpreted same proceeding, same subject matter, proceeding, the very word proceeding, is very, very restrictive. So I think the full impact of 6(2)(b or the protection that if you read the GST Council minutes, the whole intent behind that we have not achieved. I think clearly the solution would not be achieved in courts on the basis of 6(2)(b). So the only thing left is using a different parameter. We have to use a ease of business parameter to evaluate how do we go about this. I think a lot of ideas have been mooted since the morning, whether it's a AEO kind of a concept, whether we come up with a LUT kind of a concept. But one way or the other, I think we will have to deal with this. There is no sort of, I can't overemphasize the point, because I think a lot of the so-called benefits of GST in terms of simplicity, one market, so on and so forth, gets completely negated. And the degree of it is going up with every passing year. I think if you had asked me, how Vineet was saying that maybe 2 years back, I would not have spoken so vehemently. But I think in the last 2 years, it's becoming more of a hassle. I see, especially, I advise a lot of service entities who are spread across the country, who are registered across the country. And Ritesh touched upon the fact, there is a massive lack of understanding in SGST authorities when it comes to services. For very clear and clearly understood institutional reasons, because of they have been used to deal with VAT. Of course, there have been some capacity building measures, but we all know, or at least the result is not yet visible. So I think a very clear intervention is needed from the government. It can take, now when I say intervention is needed, the easy thing is to say, let's issue an instruction. An instruction was issued last year to stop collection of tax at the time of search and seizure. We know how effective it has been. So I think clearly instruction per se may not work. I think this is a topic that needs to be addressed at a GST Council level, because unless there is a federal consensus on this between states and center, I don't think an instruction issuance is going to lead anywhere. And the spectacle or the parameter through which we have to evaluate has to be ease of business. I don't think we can look at it from a legal perspective. Do I have jurisdiction? Because the moment you look at it from a legal perspective, you have plenty of arguments from both sides. You can keep arguing till the cows come home, whether it's the same subject matter or a different subject matter. Is this a proceeding? Is it merely, is inquiry a proceeding? Is a notice a proceeding? Is a mere email a proceeding? There is no point, because it has to be from, we keep talking about design thinking. It's the user who has to benefit. And I completely agree with Vineet there, that he is the ultimate person who has not the three of us here, but he's the user. So people like him across the country have to tell us, and it is their perspective of ease of business from which this has to be guided. So yeah, I think definitely this is becoming a major issue and ought to be dealt with.
Yeah. So you mentioned a very interesting point on circulars and clarification, and I want to come to Ritesh on this. You know, we've seen of late the government issuing circulars, and by way of circulars, they're actually trying to, you know, classify certain products, certain goods, services in certain categories. So do you feel that is the right approach, where there is an interpretation issue that the government should issue a circular? Because, you know, most of the times the circular can also have a retrospective effect, which would mean that there would be, you know, the position changes retrospectively. So on that count, what are your views? And, you know, from a policy standpoint, is it a good thing or is it a bad thing, or the government should look at it and issue a sort of an internal, you know, kind of a note that, you know, you should not be clarifying interpretational issue or classification issue by way of circular? Because we've seen a lot of assessees also go to court challenging, you know, classification done by way of circulars. What are your thoughts on that, Ritesh?
See, there are two situations. One is take an ISD cross-charge issue, where there is absolutely zero clarity on what we need to do. We do not know what is the government mindset. Nobody has been able to assess. Somebody is saying, yes, this is the right approach. Somebody is saying this is not the right approach. Take another example of intermediary, where a clarification got issued. I think circular issued at the central level with a well-applied mind and with, you know, complete proper analysis as to why a tax is applicable, not applicable, is still good. At least you know the mindset, and you can then go ahead and challenge the circular in the court of law. But different authorities issuing their own interpretation of law is extremely damaging. So let's say if, and I'm not sure whether such situation has happened, let's say if state government authority goes and issues his own circular to say this is the law, how it needs to be interpreted, then clearly that's not the way forward. So my sense is, you know, before going to courts, and that's the ultimate step, we need some guidance on what's the government thinking. It can't be FAQs. It can't be instructions. It has to be a legal circular communicating their very clear position in law, and then you take it ahead in terms of the court process. Because if such a clarity is not there, like, it will become an ISD cross-charge issue, when everybody is clueless of what needs to be done. Some will argue ISD, some will argue cross-charge.
So we need, from an industry standpoint, how do you view circulars being issued where they clarify certain things and then it becomes applicable retrospectively? So we want to know from you, what is the industry perspective of that?
Sorry. So I come from, actually, half of my career has been on the other side, on the government side. So as we learned, basically, circulars were normally to be issued to ease the rigors of law. That was the basic concept. There are two things, circular and notification and instructions. There are three things which are normally left to the subordinate authorities or the under the delegated legislative powers. Notification are normally to register which something is provided in the law itself. Circulars are normally issued by whether it's CBDT or CBIC to ease the rigors of law. In certain cases, maybe it's in general, assesses in general or a particular sector or a particular as issue. Instructions are issued to their subordinate authorities, which are binding on them, not binding on us. Okay. Of late, a new trend has started. By way of circular, the boundaries of law are being stretched. Circulars are being issued to explain or to read the law in a manner which government authorities believe that this should have been the law. Unfortunately, that's not the case. Circulars are not supposed to be for that. That's the job of courts, how the law is to be read down. So if a circular comes and says the input credit will not be available for this challan or that challan, this is not written in law. If this is not written in law, you cannot come and deny a right which has been vested in the subject. Okay. So that is how I read the law, and especially in GST, what's happening because of this dual jurisdiction. Maybe those, if there is a circular issued by CBIC, unless a contemporaneous circular has been issued by the state authority, it's not binding on them. Number one. Number two, instructions are absolutely not binding on state authorities because they are not under the jurisdiction of CBIC. This is happening not only in not only under this GST law itself, but if you go further to IBC, where numerous instructions have been issued by CBIC. But I don't know how many of you handled IBC cases. Anyone in DGFT, anyone in customs, are they being followed? No, zero.
So Shudipta, sir made a very valid point that by way of circulars, the government at times tries to encroach upon the quasi-judicial functions. So you would have, of course, seen, in your practice that you are probably fighting a show cause notice for a client on a particular issue, and then in the middle of it, a circular is issued which is contrary to what position your client has taken. And then, since the authorities are bound by the circulars which are being issued, it is basically the end of road for adjudication, and it doesn't have any meaning after that. So how do you sort of deal with a situation like that, and what do you think a company should do when something like this happens?
I mean, as you rightly said, the moment there is a circular which, in Vineet's words, which stretches the law without really explaining the law, I think the only option left for us, as unfortunately has been the case in many other scenarios, is to approach the High Court. Because there it becomes a ready answer to the defense of alternate remedy. We can say that clearly if there is a circular, government has made up their mind and there is very limited ability of an adjudicating authority to go against their circular, given that it is binding, etc. Yes, there have been cases where it is said that a circular which is legally erroneous is not binding. But who decides that whether it is legally erroneous or not? Adjudicating authority is not going to take that effort. It's very easy for him or her to just toe the line that is there in the circular. So to that extent, I mean, writ is the only option, but I don't have a very strong view against the practice of issuance of circulars, Rajat. Yes, in many cases it does usurp a quasi-judicial authority, but like we have been discussing so many of the issues, including cross-charge versus ISD, secondment, how to deal with that, or many of these issues. I think a circular or intermediary, while I don't think the intermediary circular has really helped, but at least we have something to fall back on to know that, okay, this is the interpretation. Now, if a ground level authority is not accepting, etc., that's a different thing, but at least we have some guidance on that. So I think on some of these interpretative issues, certainly. On classification issues, I think that's a subset where the problem definitely arises, because a lot of times they're very hastily crafted. While a lot of representations, etc., get filed, I don't think they get taken into account. I have seen, and I think this is one matter that you are probably fighting in Delhi High Court in the context of spent grains. How do you classify spent grains which get used up by the alcohol sector? And there, if you see the clarificatory circular that came in, it, I think, dealt with one particular argument, that too in like 2 lines, even though like 30 pages worth of scientific literature, etc., summary was provided. So I think those sort of scenarios, you have no option left but to approach the High Court.
So now on that point, I'll come to Ritesh on one of the most burning topics, which is the GST tribunal. Now, a lot of discussion is going around as to how the structure of the tribunal should be, when is the right time, what it should be the qualification of the members, whether there should be judicial members or not. Now, I have a very different question to you, Ritesh. One is that, do we really have the infrastructure in place to create tribunals in each and every state in India? And what happens when the same company, one company with issues in multiple states, go to multiple tribunals and gets multiple verdicts? How do you see that aligning and dovetailing into something which is acceptable universally across all industries within the country?
I was actually having a similar discussion just in the morning with someone, and he just showed me some multiplication calculation of number of members, number of benches, and whether we have so much of judicial members even available. Yeah, maybe technical members might be available because they are coming from the state. But, having so many, how many benches could be there in one particular state, right? And if you spread it across India, today, anyway, we are struggling on judicial members as far as, CSTAT is concerned. So I really don't know, whether the number of members, etc., would be sufficient enough. Having said that, at least we need to start somewhere. It's been 5 years, and you said, Is it the right time? The right time was 5 years before. There is a pendency, matters are in the call book. Maybe luckily people would have not paid the pre-deposit. There is no way forward. In certain cases, high courts are entertaining it. In certain cases, high courts are saying, no, sorry, put it in the call book, go back to the remedy. There is no clarity on what is the position in law. At least there has to be some way forward. Another big problem which I think Vineet and I were discussing in the morning were state members. And state member needs to be transferred only from within the state. So which means that, litigation is more about litigation strategy, right? What bench? And if you are stuck with one bad state member bench, you're stuck with him. So, how do you come out of that situation? And what will happen is you will then start strategizing on which state is good for me to file a matter. And that is how, why can't a state member be transferred from one state to another? Let them have an exposure of across India. So good thing, judicial, technical, there is a balance. There are certain issues in terms of referral, third member. Now who would that third member be? Again, if it is a state, can it be a state member? Because the number of judicial members have to be more than the state member. It can't be less, right? Or equal. So there are certain nuances which at least I am not clear with at this moment. I don't know if Vineet or Sudipta would have a better idea, but yes, it has to start. So I think let it start and then let's see how it evolves.
Sure. So Vineet, as you know that there is a lot of pendency of cases before High Court or even cases which are waiting to go before the tribunal. Now, do you think it's maybe a good idea that there is an amnesty scheme which is introduced prior to the setting of a tribunal so that companies who want to sort of settle the issues and not really litigate can do that, and in that sense the pendency might come down? We recently saw that under the FTP there was an amnesty for EPCG and advance authorization, as also under GST for registration cancellations there was an amnesty, and they gave a window till 30th of June to sort of file for a revocation of the suspension or of the GST registration. So in that context, do you think it might be worthwhile to explore a scheme where some issues at least can be settled by way of amnesty and then rest can go before the tribunal?
See, in principle, any amnesty scheme is against the honest taxpayer. Okay. So given that, there have been amnesty schemes in this country, and when we talk about GST, which is a law which is evolving, and maybe on many issues, there is clarity which has built over a period of time. Okay. And initially for 2 or 3 years, basically there was a lot of confusion also amongst the authorities, amongst the assessees. Probably there are bona fide mistakes. I'm saying it's not the positions which have been taken, but bona fide mistakes. I mean, I'm aware of many cases where the returns could not have been filed in first 3 or 4 months. People approached because that transition window was not open and it got closed, or somebody could not apply in time. There are hundreds of reasons for that. Okay, and people are still struggling at multiple levels. And so it's not a bad idea. It's not a bad idea, and sir, Sanjay sir is right now here. So man, that's why I can take liberty. It's not a bad idea. Tribunal or no tribunal, it's not a bad idea when we are celebrating 6th year, after 6th year, that to clear up this kind of things. See, those who want to litigate will continue to litigate, those who have taken positions, whether it's a government position or it's a private position. But there are hundreds and thousands of those small taxpayers who have committed certain mistakes or situational problems. Probably it's a good, and they want to pay tax. They are just worried about those penalties and interest. At least those can be spared off, because it will be a good revenue for the department, and certainly there will be less burden on various commissionerates and various tribunals whenever they come up. Because tribunals, as of now, they have to be formed, and then it will take for them also time to settle. And by that time, the kind of audits which are happening now, actually the cases will rise exponentially going from here. So at least till now, it is more of less litigation for, I know when people forgot to file return, there is a litigation. And now there are a new set of litigation, people forgot to file appeal within time. They are small people. And since their commissioners appeal or the state joint commissioners appeal, they do not have authority to condone those delays, and that's why they are just rejecting summarily, and those people are just paying 20%. State government is authorizing, nahi, aapka stay ho gaya hai, ab tribunal banne tak wait kijiye. I know 5 or 6 such people. So those things can be sorted out probably. So it was a humble request that yes, that kind of amnesty scheme should come, so that once for all this initial problem or hiccups can be cleaned up.
Sudipta, your take on this? No, I mean, I think echo what Vineet said. I have nothing more to add. I think all the points are completely valid and acceptable. There are far too many of those scenarios, at least in the, maybe we have a cutoff in 2020, because I think by that time the law, at least the kind of aspects or issues that you were alluding to, by that time people should have known. So maybe we don't do it till, I mean, the last financial year, maybe we sort of do a cutoff early. But as a concept, for sure, I think amnesty is required because, coming back to the tribunal, what happens if we don't have an amnesty? We are already in the 6th year of GST. I mean, look at how a SESTAT is functioning. Today, if you go to any of the benches, I think appeals of 8 or 9 years previous financial year are being taken up. And that sort of a delay, I mean, in a kind of an economy that India aspires to be, I don't think it's keeping pace. So when we are, let's assume the tribunals come into force from January of 24, we already have that much of backlog. So we are straight away, by the time we are in, say, 1 year from now, by the time we're celebrating 7th year of GST, we have 6 years of pendency. So anyone filing an appeal in 2024 will not have any resolution before 2030. I mean, that will just not work. I mean, the whole point of a good and simple tax, I think the simplicity would be completely gone from that perspective. And I think connected point, since we just spoke about the tribunal, and since I have the benefit of your presence, sir, what I don't understand is why for members, lawyers with 10 years experience, who were allowed to be members of SESTAT, why is that category being excluded? And I don't ask because Rajat and I are lawyers. I mean, genuinely speaking, if you look at what are the eligible categories for the judicial member, one is a high court judge. Second is someone who has a 10-year, I mean, district judge, additional district judge who has a 10 years experience. I don't think there are too many high court judges who will be interested in this, but let's assume there are a few. But I mean, when we are talking about the other two categories, very unlikely they would have had any exposure to GST. I mean, if you look at we have had in this country about 40, 45 years of experience of working of tribunals, not only in the tax sphere, but across, I mean, NCLT, etc., all of those tribunals. I would say that comparatively speaking, SESTAT, I think, would qualify as one of the better functioning tribunals. For all the, complaints that we might have, on an average, I think it's one of the better functioning. Why don't we replicate what has worked and try and improve upon it? If you look at the, VAT tribunals, there are so many times the bar associations in states have had to approach the high court in that state, where the courts have had to intervene saying that, no, you appoint members, no, you have to function more than 2 hours a day, because even that at times was not happening. So we don't want that, right? I mean, I'm not saying let's start with perfection, but let's start somewhere where we will not get stuck immediately after starting. Yeah. Thanks. So now moving on to something which is a bit more, I guess, broad-based. So Ritesh, rate rationalization under GST, do you think we still need it, or is it still, in the sense, too early for it? What are your views on that?
My view would be, I think we should stabilize where we are rather than, now thinking about too much of tinkering with the rate, because, since introduction of GST, there has been many such instances where rates have gone up and down. Maybe some deserving sectors, yes, but otherwise, I think, yeah, there may be a need to rationalize rate on services, which Vineet was mentioning today morning, because that probably has gone up, but I think there is a RNR of 11% what was being mentioned. So I don't think so we should tinker with the rates too much, because a tinkering of rate means, again, everybody has to go through system changes, etc. I think what is required is that the fungibility is improved, because the effective rate is in some instances a lot more higher. Let me again give you an example which relates to all of us, which is legal services, law firm. We are under reverse charge for ages. Is everybody intending to hint that we don't comply with law or we cannot comply with law? See the fungibility which is getting blocked. Why do we need it under reverse charge? Let lawyers be under reverse charge, individual, but remove law firms out of reverse. I think the fungibility is a larger issue than rate rationalization. If that can be addressed, I think your rate would actually be far more better.
Yes, I think that's a very interesting point you make, Ritesh, because whenever somebody is under reverse charge, obviously the credits gets blocked and then eventually it leads to a rise in the cost of the services. So, Vineet, what are your views on rate rationalization? Do we still need it, or you think we are doing fine right now?
No, I think rate rationalization is never I mean, it's a position that, okay, now is the day. Rate rationalization, I think, is a dynamic process, and it should continue because we are a diverse country. We have a large plethora. I mean, there are different issues or different reasons for rate rationalization at some point of time, and of course, other than consumer behavior, it also, the government also wants to direct particular economy in a particular fashion. And it can be done through rates and taxation only. Okay. Earlier, income tax used to be a tool for that. Now, probably GST is a better tool, for me, I would say, because income tax had become like administration for all social activities, industrialization, everything, all that Chapter 6A deductions or Chapter 6 deductions. Now, GST is the way. And why we say now is the day? Because we have crossed 1.6 lakh crores. Why not we wait for 2 lakh crores? And what was wrong with 1 lakh crores? Nothing. So it's not the case. I mean, I would say when the government is comfortable with the finances and the kind of massive capex plans it has, it needs funds. So I would not say, okay, no, because you have now started achieving 1.6 lakh crores, so give me money or give me some relaxation or some taxes. Yes, it's a dynamic process, and if any target is to be made, I would request that services now should be addressed, because pre-GST services were taxed at 15%, and it's, I think, only sector which has gone up, probably because it was to be kept at par because it was not subject to VAT. But now there may be some scope for services to think, start thinking about.
So, Vineet, staying with you, we have had a lot of discussion around sustainable development and sustainable growth, and being conscious about the environment. And then we have some rulings which say that you can't take credit on CSR spends. Now, how do you marry these two thought processes? And we have the benefit of Mr. Mangal.
Last year we had a discussion on that.
We have the benefit of Mr. Mangal over here.
It so happened that when income tax denied that, we said, oh, it's being allowed indirect tax. So indirect said, okay, income tax is not allowing it, so we'll not also allow it now. Okay, so it's other way around. No, see, again, my fundamental question remains why there should be a denial for input credit. Because CSR, by definition, there are two kinds of CSR expense. One is, which is under Companies Act, Section 135, which is specifically being denied in income tax, and since it is being denied in income tax, GST also says since it is being denied there. But our fundamental question remains, when by force of law, if you are asking a corporate to spend money, why it should not be treated as business expenditure? And if it is business expenditure, why it should not be allowed as input credit? Okay. Second one is voluntary CSR, which government of the day, or even government of the day, it's like environment of the day requires corporates or businesses to incur those kind of expenses. And if they are incurring them, if this is real-time expenditure, why not allow, at least, I'd say facilitate them? So I'm not restricting myself to CSR again. I'm saying why even restrict any other expense, be it employee insurance or those kind of things, or maybe 13-seater vehicle or 12-seater vehicle, which was a discussion in the morning. I mean, who will keep record of that? Maybe government has something in mind that, okay, we want to promote larger vehicles or smaller vehicles. So probably the better way is to increase GST there rather than denying credit, because it again requires a lot of manpower, a lot of this, that, a lot of decision making, which is against the very concept of automation in the GST or seamless credit. Probably this can be better administered by tinkering with rates here and there. So that's my suggestion. And then again, there was a very good discussion in the morning when the members of us there, that has somebody done a study, I mean, by restricting this, what percentage actually we are blocking? Okay, so there was a discussion that how will we calculate? Under income tax, it is an age-old concept that for contractors, 8% of your turnover is a profit, or 5% of your traders is a profit, or 1,400 rupees per truck is your profit. I mean, those kind of, what do you call those profits, I mean, those kind of estimations are already there in Income Tax Act. Same thing can be brought, a larger study can be done. Okay, you are a large corporate, you are supposed to incur certain expenses which are not eligible for credit. don't do any credit calculation. We say out of your credit 0.5% you disallow. Sure. Okay, standard. If you don't want to disallow that and you say I want to do it, okay, this is the audit report, like we do it in income tax. This is the audit report, you get your accounts audited, present it. Okay, but most of the people actually go with those schemes. And that's why a lot of manpower and a lot of efforts are reduced. So that can be an idea, probably I'm throwing out, probably it can be done.
Thank you so much. I think we are slightly short on time, so I will, sort of open the discussion to the House for about 5 minutes. If we have any questions, we can take those, or else we can wrap up. Yes, Suneja.
Just have an input because we have been talking for an SC since morning. So agree with the ideas, and again I'll take this opportunity of Sanjay sir's presence. So if not for all cases, at least in cases wherein full ITC is being allowed to the recipient, because therein even if tax was paid in the beginning, ITC would have been allowed and there would have been no revenue loss. So if interest can be waived in that, I believe a lot of litigations can go therein. So if let us say it's not a revenue neutral transaction, interest is an opportunity cost for the government also, probably amnesty might not cover those cases, but wherein ITC was fully allowed. And we have seen this concept for related parties also. That might be a good starting point for amnesty and for a lot of litigations to be settled.
Sure. I think Manish will take these questions in his session on legislative changes. So thank you very much. Okay, we have one more question. Yes, please.
I just need a clarification because I'm very confused about this ITC on CSR. See, CSR expenditure is an appropriation to P&L. Now, if you claim the ITC, it becomes a balance sheet item. So what you're saying is, take the ITC on CSR, incur more CSR, because let's say 1,000 rupees is my net profit, 2% is 20 rupees. So should I incur 20 inclusive of ITC? If I take ITC, that becomes less CSR because that is appropriation to profit. So if I incur 20 plus GST, then what you're saying is incur more CSR. So I personally believe that, this is very confusing to suggest take ITC on CSR because then you are asking the companies to incur more on CSR. Yeah, just if somebody can clarify.
Yes. You are becoming hyper technical on that. Okay, my simple answer is that. Okay, this is the answer which we normally listen. Okay, I can give you. This is only a measure. 2% is only a measure under the Companies Act that how to calculate your CSR spend. That is not a benchmark. Okay, and capital goods, you get credit, na? Right? So it can be clarified that your CSR expenses of 2% will be of your net profit or your gross profit, whatever it is. But at least allow those credits to be passed on, allow that to be a deduction. It's only a measure that out of your profit, 2% should be spent. Okay, but why should it not be allowed as an expenditure? It doesn't say post-tax profit or pre-tax profit, okay? So that measurements can be changed. Okay. Let's not be hyper-technical on all that.
And when an amount goes towards GST, your actual CSR spend reduces. It goes down, it doesn't go up.
Right. Okay, so I think with that, we'll close this session. Thank you very much, Mr. Agarwal, Ritesh, Sudipta. Always a pleasure interacting with you all. Thank you so much.
Put your hands together for the eminent speakers. Thank you very much for conducting an insightful session. We request you to please come together for a group photograph. Ladies and gentlemen, the third and the last session for the day is centered around the key legislative issues. This session will be chaired by Mr. Sanjay Mangal, Principal Commissioner, GST Policy Wing, CBIC. Please join me in welcoming Mr. Sanjay Mangal on the stage. Sir, a very warm welcome to you. This session will be moderated by Mr. Manish Mishra, partner J. Sagar Associates. A very warm welcome to you, sir. Kindly keep the applause going as we now invite Mr. Ravi Gupta, Head Indirect Taxes DS Group, Mr. Deepak Suneja, partner Nitya Tax Associates, CA Himanshu Goyal, partner TR Chadha and Company LLP. A very warm and hearty welcome to all the esteemed panelists. And I now request Mr. Manish Mishra to formally welcome Mr. Sanjay Mangal with a bouquet. Let's together welcome Mr. Sanjay Mangal. Thank you for your presence, sir. Thank you for your time. Thank you so much. And I now hand over the session to Honorable Session Moderator, Mr. Manish Mishra, for further proceedings.
So I think a couple of changes optical. I have got slides. And second is I am standing. So just to make some change. I would formally welcome Mr. Mangal. I mean, I have handed over the bouquet, but I am pretty sure that we are privileged by his presence, and it would be great to have his views on the issues that have been discussed in the previous sessions and the issues that we are going to flag now. One important change that we wanted to create was that we are not going to get into issues which are already under disputes. We tried to pick up the issues which are basically the problems which are caused by the way the law is written, and hence legislative issues. One benefit that we have for this session, and it is fitting nicely into the constant, we have a 2:30 p.m. cutoff. So Mr. Mangal has to leave. So some of the points that we wanted to raise have already been taken up. So we'll not kind of spend too much of time there, and we would directly seek Mr. Mangal's view on some of those agenda items. So CSR has been a big pain point, I understand, and we also picked it up. But before getting into ITC related issue, we thought that we would start with something different. Taxability of intermediary services. Now, this has been something which has been carved out differently in the law. And I've just put the provisions, relevant provisions on the slide so that everybody has the benefit of it. So, Section 13 has a specific provision for determining the place of supply for intermediary services, and it is defined to mean the location of the intermediary. Now, this is clearly a diversion insofar as the default rule for determining place of supply is concerned, which was the location of the recipient. Then Section 7 and 8, which kind of get into determining whether a supply is interstate or intrastate. And if you look at the interplay between the two sections, in the case of an intermediary service, even if it is provided from India to a person outside India, the supply ends up becoming an intrastate supply due to the interplay between Section 13(8)(b) and Section 8 subsection 2 of IGST Act. Now that is a very complex situation that is giving rise to a lot of difficulties. Of course, I mean, a direct impact of the manner in which the place of supply is defined means that these services would not or typically should not qualify as exports, and possibly that is the intention. But even on the situations where the intermediary is sitting outside of India and customer is sitting inside of India, while it would not qualify as imports, the manner in which the reverse charge notification is worded creates an impression that such services would be taxable nevertheless. Though there are certain advanced rulings which are there to say that once the place of supply is outside of India, there cannot be a tax. But if you look at the RCM notification, it simply says that when the supplier is outside India and recipient is in India, you have to pay reverse charge GST. So that in itself is becoming an issue, and there are certain interesting aspects of law which are given rise to. There is a litigation, there are litigation which are happening on this, and there was a recent High Court judgment in the matter of Dharmendra Imjani, where Bombay High Court dwelled into some of these issues. So, couple of issues which are coming up here is whether these should be interstate supplies or intrastate supplies, for the fact that it is being provided to somebody outside of India. And now, if you look at the scheme of law, if you are in two different states, it becomes an interstate supply. Now here, recipient is outside of India, but it is still becoming an intrastate supply, which is kind of creating an anomaly. Whether the states have power to levy GST Because if it is an intra-state supply, it would be subjected to CGST or the relevant state GST. Whether the states have powers to levy GST and whether such services should qualify as exports. Now, in that context, there was a parliamentary committee report which was also tabled, which mentioned that these services should be accorded the export status and zero rating benefit should be given to it. On the reverse charge side, I have already covered the points. I would go to the panel. So the easier part is that I can deflect the tougher part of the discussion to my co-panelists. So I would start with Deepak. So Deepak, I mean, what are your views on the first part? Whether these should be considered as interstate or intrastate supplies? And what do you think should be the position of law or how it should be read into? Because unfortunately, the manner in which the law is drafted it's becoming a very cumbersome reading for a layman at least. Of course, I mean, it benefits all of us, the lawyers, practitioners, consultants. But what is the real intention? Of course, I mean, we'll round it up with Mr. Mangal's view on this. But I am happy to invite your views on this.
Yeah, thank you. So in my view, and again, this is one part of the legislature which has been, I'll say, very technically worded. So you have section 8, which says subject to section 12, which indicates that probably under section 13, any provision comes, it would only levy IGST. And it has been, there had been a discussions on them. So when Gujarat High Court affirmed the validity, it indicated it would be CGST and SGST. Mohit Minerals, Gujarat High Court, when it was discussing, it indicated that IGST can only be levied on these transactions while it was discussing ocean freight. So they advanced rulings are on both sides, on CGST, SGST and IGST. So with compensation to states getting over after these 5 years, I also foresee that in coming years, there will be also a lot of disputes on whether a transaction is intrastate or interstate, because it would affect the revenue of the states. And as a taxpayer, it might not impact me that I would have to pay the same tax. But because the revenue would go to different governments, there might be disputes intra-governments or vis-a-vis a particular authority saying that it does not attract IGST, it attracts CGST and SGST. So all these disputes are bound to happen. So while in my limited knowledge, and Sanjay sir to clarify, it should levy IGST. But one last, I'll say, a request or a point in this regard is, as government has been issuing so many clarifications stating on multiple issues, and there are issues we'll be discussing later that there have been either clarifications or something on that respect, even on these place of supply provisions, and not only on intermediary, on probably ex-work sale or further similar issues, wherein the doubt is not vis-a-vis taxability. The taxability now of intermediary has been settled that it's constitutionally valid. But the doubt on whether it's an intrastate supply or interstate supply, if the government can clarify, so that the taxpayers do not later face the doubt of, let us say, paying a wrong tax and then claiming refund and then getting refund, all these points. So that would also be a very welcome move, and we'll appreciate it.
So Himanshu, I mean, I would also invite your thoughts. I mean, thanks, Deepak. In terms of, see, it is a very interesting situation. So if you go to the recent Bombay High Court judgment, they dwelled into Article 246A and 286 and said that any service or any supply of goods or services which is in the course of export or import can be taxed only by the union. Now, given that, and this is the premise which is causing intermediary services to become an intrastate supply on which CGST and SGST should be levied as per the scheme of the GST Act. It throws open an important constitutional question also in terms of whether states actually have the power to levy that SGST on these services. So, would like to share any thoughts on that?
Yeah, definitely. Thank you, Manish. Before I just touch upon what Manish really wants me to answer, since Mr. Mangal is already here, I would like to say one thing. This issue intermediary per se is very valid given the situation we are. And considering KPO, BPO and the mindset with which the administration officers are working, the moment there are three parties involved in any transaction, the first and the foremost question comes whether you are intermediary or not. There has been a circular which bit of clarify this situation, but that circular needs further update in terms of the evolution that has been happening, in terms of the update which has been happening, and the way the industry is functioning. That is very well needed, sir. If we see in terms of the judiciary, whether we talk about Dharmendra Jani or the Gujarat High Court judgment or others, where the constitutional validity has been upheld, but there has been certain aspects which have been dealt in a manner which creates a problem. And if we see that the way the judgment has been worded, if particularly we talk about Bombay High Court judgment, which we are all referring to, it has typically constituted this transaction. It's a marketing sort of services which the petitioner was providing. They have typically classified into as export of services. And they have not appreciated while classifying into export of services the provision of Rule 2.6 and the Export 5 condition, where one of the condition is that the location of the supplier has to be outside India. And in the intermediary services, the location is coming within India. With it, the interplay between the 8.2 and the 7.5C, which we have seen in the preceding slide, the 8.2 classify and with 13 subsection 8 clause B of the intermediary, which talks about the intrastate supply, and 7.5C is VC, which talks about the residuary rule. According to my view, it should clearly falls under 7.5C and IGST should be applicable. And most of the people sitting in this house, to my knowledge, we are all depositing IGST, and that is somehow the judgment is also, towards the end they have said the same. The states cannot levy tax on the place of supply which is under the interstate, because the parliament has given the power, parliament has the power to enact that and state does not have. And the transaction which is inter cannot be measured as intra by the state, and accordingly Maharashtra tax and the central tax cannot be levied on the same.
So in fact, interestingly, if you read the judgment, it has said everything, but it stopped short of holding 13.8B unconstitutional. And that is the most frustrating part of that judgment though. But fundamentally, if you, sir, and I come to you here, I mean,
Manish,
yeah, sir, I'll come to you on this. Just give me a moment. And there are some important points here which Mr. Mangal can clarify. Sir, we do understand that the intention of the government was not to accord the status of export to intermediary services. That seems to be the underlying thought. But the parliamentary committee, of course, recommended otherwise. Now, I mean, I have two questions for you here, sir. One is, was there a specific reason to kind of ignore the recommendations of the parliamentary committee? Given that intermediary services revenue from services which are being provided to people outside India, I don't think that it's going to be a significant chunk. Second point was, sir, why are we writing the law in such a complicated manner? I mean, at the end of the day, it is, as I said, I mean, I don't mind it. We can come out with two possible interpretations and fight on both the sides. But the point is, it is becoming such a complicated situation for a layman to read the law. And I think with 6 years being completed on GST, it's possibly also the time to take stock and simplify some of the language which has been used in the law, possibly do away with some of the provisos, explanations, however, notwithstandings, and make it a law which is easy to understand and uniform or simpler to implement also. So, sir, these are the two points which I wanted to pose before you. I mean, I'll come to you after this.
Manish, before Sanjay sir start, I would like to add one more dimension to your question. So, one of the important finding of Dharmender M. Jani judgment was that provisions of section 13 subsection 8 would not be applicable to CGST Act and SGST Act. And we all know that place of supply provisions are there only in IGST Act. So do we need separate provision for place of supply in CGST Act and SGST Act? Is this what this judgment is saying?
So it is not only this judgment. In fact, interestingly, if you look at the preamble of the integrated GST Act, it says it's an act to levy tax on interstate supplies. Now, fundamentally, by the way the law is written, and especially in the context of intermediary services, it is so happening that we are creating it to be an interstate supply, and the levy, to that extent, is kind of getting overlapped between the two acts. So that is why, I mean, I asked, sir, I mean, why is it written in such a complicated manner where nobody can actually decipher it in the first reading at least?
Thank you for your suggestions and all the issues which have been flagged. First of all, I would like to thank ASSOCHAM for giving me opportunity to be amongst you again. And every time I come here, like we get a lot of inputs, lot of suggestions, some of which are taken care of in form of circular or amendments wherever possible. So I feel that today also those opportunities will be available to me to get some feedback which can be operationalized. So to begin with, now I will come back to this topic of intermediary. There are 4 or 5 issues which have been flagged. First issue is about the legality of imposition if it is treated as intrastate supply. Second is whether it is interstate or intrastate. Third is what is the need of intermediary, whether we can do away with concept of intermediary at all. Fourth is about more clarity about intermediary. And fifth thing, I think the same thing, what is the need of intermediary, why even after parliamentary committee suggestions. Yeah, and second, whether we can improve the wordings so as to make it much clearer. So coming back to the first question, whether it is interstate or intrastate, and whether this sort of clarification, if it is intrastate, it can be given by IGST Act, which is essentially an act to provide provisions for interstate supply. So this was the scheme of, the Constitution has given the power to government to come out to provide where the place of supply will be through a legislation, which the power has been given to central government. So as per which they have to provide place of supply, and it has to be provided in one of the laws, whether it is CGST Act or it is SGST Act or IGST Act. So in that, they have provided the provisions for place of supply in IGST Act. The laws are very clear, the provisions are very clear in IGST Act, which supply is interstate, which supply is intrastate. Once it is interstate supply, it will be governed as per provisions of CGST Act and SGST Act. And once it is determined as interstate supply, they will be governed as per provisions of IGST Act. So I do not find any fallacy in this. Otherwise, you will say each and every supply which is intrastate, this is illegal. Because some law has to determine whether it is interstate or intrastate. CGST Act or SGST Act nowhere specifically mention it is what is intrastate supply and what is interstate supply. This is determined in one of the laws, which is also passed by Parliament. And once that law defines what is intrastate, then it will come under purview of CGST Act and SGST Act, and therefore levy of any supply, levy of tax on any supply which is determined as intrastate by state and central government is not unconstitutional or not invalid. This is my view. Again, it is liable to be interpretations by different courts and different people. Second thing is whether it is intrastate. In our opinion, it is very clear in IGST Act that it is an intrastate supply. How? The place of supplier is in India. There is no doubt about it. There is no controversy about it. About the place of supply. What is place of supply? Section 13(8) makes it very clear that place of supply of such services will be the place of supplier. And again, Section 13 is again very clear where the place of Section 7 is very clear that where place of supplier and place of supply is in same state, it is an intrastate supply. So there is no doubt it is an intrastate supply. It cannot be interstate supply because the place of supply is in the same state where the supplier is located. It is the same location of the supplier. So where the supplier is there only the place of supply is there, and therefore it is an intrastate supply only. And therefore CGST and SGST have to be charged on that. There was some confusion in High Court judgment of Dharmendra Jani. We are aware of it. We tried to take it up, but the only issue we emphasized in court was about whether the constitutional legality of the provision, which was ultimately accepted by High Court, which I think you feel that it is unfair to trade. but this is the decision. And this going issue, I don't think it is going to finish at this stage. Maybe it is going to Supreme Court, or maybe it's going to higher forum. And ultimately, it will be decided by Supreme Court at some stage. Now, what was the need of intermediary and why this has been brought out? This is, I feel, because I was not there when this law was framed, but I feel because this provision was introduced in service tax. So it was imbibed directly from service tax. It is not new to GST. It was already there in service tax, and directly from there it is imbibed. This was brought in service tax, I think, in 2014 for services. So whether we still need it, this is a question. This can be raised by industry, and maybe like at some stage, government or council have a relook at these provisions, whether we still need it or whether we can do away with it. There are revenue implications, definitely. It is not that revenue implications are not there. There are huge revenue implications. So a conscious decision will have to be taken by council for benefit of everybody, whether we still need to continue with the provision of intermediary or not. Regarding these provisions having a slightly complicated wording, I don't know. I think where law is there, this complication will be there. And we cannot do away with, because I listened to it a number of times. But it is inherent, I am telling you, if you simplify the law too much, it is liable to such misinterpretations. And therefore the lawmakers, when they start writing it, then they provide all sort of precautions, like proviso comes because of that, notwithstanding comes because of that, because you do not want clash with other provisions in some cases. And if you do not have those things, it can be made very simple. I don't say, but then for that you have to rewrite the law totally. If you have to work on this law, then these provisions are bound to happen. And our effort is to simplify as far as possible. But again, I am saying if you request government that this law should be rewritten, it will be a disaster for industry again. Because again, industry will have to understand it from a fresh perspective. Again, various complications will emerge. When somebody else will rewrite it again, then there will be different sort of complications again. So while we are on the effort to make it simple, but again, it is not totally possible at this stage to revamp the law and make it totally just in a common man's wording.
So sir, one last point on this. I mean, any specific reason to disregard the parliamentary committee report, which kind of recommended that export status be granted to intermediary services insofar as it is provided to customers outside of India, recipients outside?
No, Parliament committee suggestions are only recommendatory.
Yeah, absolutely.
In GST Council is the constitutional supreme body which determines what has to be done in GST. And that is as per the consensus of all the states and center. So while parliamentary committee suggestions are taken on board, they are deliberated by council, but ultimate decision is of council only, which is implemented in GST.
Right, sir. So only one point, and I would move on to the next issue with that. So when it comes to the reading of the law, and you did mention that, there is of course a friction between section 8 and section 13 and section 7 which is getting caused. Because if you look at section 8.2, it starts with subject to the provision of section 12, which kind of gives an impression that 8.2 would apply only in those cases where the place of supply is determined by under section 12, where the supplier and the recipient both are situated in India. And that is causing or adding to the confusion quite significantly. So I'm just trying to highlight that issue, because the idea was to bring out the legislative issue which are there in the law as of now today.
I don't think there is a clash. Like again, a law is such that it is liable to be for different interpretations. But we are very clear that where the place of supplier and the place of supply is in the same, is in the same state, then it is an intrastate supply. But again, I will say I am not the final authority for this. There are courts, there are...
So your views do matter,
yeah,
sir.
yeah, but this is the view which we are taking. We were not aware of this issue, like there are disputes on this. If it is felt that there are disputes on it, I think we can have a look at it, we can issue a clarification. There is no problem on that. So if you can formally send a proposal to us or something about it, we will take it up.
So, sir, coming to the next point, which is on ITC, and we have been discussing ITC since the morning. I think I would first start with the issue on CSR, which is a recent amendment and which was raised in the previous session also. We would like to have your views on it. I mean, what is the thought process that the government has, given that there is so much of focus on ESG, that everybody is talking of be environment friendly, you follow sustainable trade practices and everything, and now on the other hand, we are curbing the expenditure on CSR, at least by disallowing the credit. So to that extent, cost of CSR is going to go up by 18%, which could have two implications. Either the funds allocated for CSR would come down, or industry has to spend more. But in any case, the idea should be to encourage it further. And to that extent, don't you think that, sir, this is a retrograde step? I mean, looking at it from that holistic perspective.
Thank you, Manishji, for question. It was a very interesting discussion which was going on in the previous session, and I was listening to it, and there were some suggestions. There was a question also from one gentleman on the back side, and that was also responded to. So now I will like to clarify what was the intent of government or council when this particular provision was suggested. Now CSR expenditure under under this Companies Act is required to be spent by a company as its corporate responsibility obligation, because they are using the resources, they may be doing some damage to local environment or something like this, and because of it was decided that it is required from the industry to have some corporate social responsibility and make some expenditure for the benefit of local population or for other social reasons. For this purpose, already it was mentioned by Mr. Vineet that in Income Tax Act this issue was earlier also flagged. So the issue was income tax already denies the expenditure on corporate social responsibility for the purpose of considering in your expenditures. So when this issue came up, once on one side we were saying that we should encourage corporate social responsibility. This is acceptable, but whether industry needs ITC on that, because in number of cases, for example, you are supplying an item, any item. You say, I will take 100 rupees ITC on this, and then I will supply this 100 rupees to another company, another person. So what amount you have borne? You have got the ITC of that. So in effect, your total social corporate responsibility amount is reduced to that extent, and which is the point which was raised by the gentleman on the back also. So why you should not bear the full amount of that corporate social responsibility cost? Why do you want a sort of subsidiary or some sort of incentive even for that expenditure? So this was one of the issues which was discussed, that corporate social responsibility, which is legally required or voluntarily also it may be done. The company should bear, or the particular organization should bear the full expenditure. Second, one issue was this. Second, there are chances of misuse of it if ITC is allowed. This issue was also discussed by the officers and in the council. For example, if I have to spend, for example, 2 crore in my corporate social responsibility, somebody raised the issue, I will buy TVs of this amount or with 28% ITC, and I will take ITC on that. And I will distribute it. Why then I will buy an item which is of 5% or which is of zero tax rate? I will buy all such items which are of 28% duty. And I will take ITC and I will then spend on corporate responsibility. I will show I am doing a lot of work, but on the other hand, I am getting benefited out of it. So this was also one of the reasons because of which this decision was taken, that let corporates bear the full burden of this corporate social responsibility, and ITC should not be allowed on this portion. This is what was behind the mind of officers and the council when this decision was taken. Thank you.
Thank you, sir. So Ravi, I move to you. And the point is again on restrictions under section 17.5. Now, when I was reading the GST Act for the first time, see GST Act, section 16 starts beautifully, which kind of allows credit for all expenditure which is in furtherance or course of business, right? Beautiful intention, noble thoughts. But when we move further, then comes in section 17. And suddenly you have all these restrictions coming in, rent a cab, life and health insurances, by implication, of course, works contract, construction services. Now, given the fact that these are all business expenses, and we are talking of a value-added tax, and going by intention, which is carved out in section 16, of course, this is hurting businesses. You have to set up a factory. It is, of course, a business expense, so why not construction services? I am running an IT, ITS, BPO. I am exporting services. I have to provide insurance to my employees for business continuity. I mean, I need to provide them health insurances or whatever. And that's a very common practice today. Even Government of India has its own schemes like CGHS, ESIs, and whatever. Now, given the world today, given the business environment today, do you think that these kind of restrictions are justified, and don't they cause a friction between section 16.1 and 17.5 per se? So I would want to have your thoughts from an industry perspective, of course.
So Manish, when the GST got implemented in 2017, so one of the main idea behind GST implementation is to remove the cascading effects of the taxation. There were cascading effect of taxation, like no ITC was allowed on 2% CST, 2% or 3 or 4%. So this was one of the main agenda of GST. But now in GST, there are day by day, there is an increased list of blockage under ITC. So I was listening someone in the morning session that if we go away with section 17.5, it will be a beautiful proposition for the businesses. Today we hired a lot of persons, or rather low-level person who may not have knowledge of CGST Act 17.5. We just gave them a list. Okay, boss, this is the list. See and find out what are the eligible ITC, non-eligible ITC. So just to find out 1% or less than 1% transaction, we have to dig out more than 10,000 transactions in a month. So just wastage of efforts, blockage of funds. It leads litigation, right? So I am fully in agreement with someone's idea that to just disallow 0.5%, 1% based on the previous year credit. You allow everything for these common services, this ITC, and just allowed 1% or 0.5% or less than 0.5% as a block credit. So this will be saved a lot of manpower, lot of litigation. So it will be a great help to the industry.
But if you think of a service industry, I mean, this can be a huge amount. I mean, we talk of insurances, we talk of rent-a-cabs, we talk of a lot of employee benefits which need to be extended as per the local laws also. And to that extent, I mean, that restriction kind of seems to be a bit artificial. There is a background, I mean, works contract, construction, because we were coming from VAT and excise regime, and some of those transactions were not taxable. So of course the credits were blocked earlier also. But now I think we have moved to a full-blown value-added tax regime, and to that extent, some of these restrictions seem to be a bit of an overdose to the industry. And sir, I would want to ask you, I mean, if I am setting up a new factory, of course I have to undertake the construction, works contract services would be there would be supplies. Why should the ITC not be allowed here, logically speaking?
Logically, why it should not be allowed? It was not allowed because it was not available in VAT regime. And second, there was a feeling that because it is going into construction of an immovable property, which is outside GST regime, so this ITC should not be allowed to be passed on. So this was the feeling. I am not saying it is right or wrong. And whether a time is ripe now to have a relook at 17.5 restrictions, because there was a feeling that these 17.5, if we allow all these credit, then it will be a very big dent on revenue. And there are certain items which are like this towers are there or pipelines are there or yeah, this construction property, this thing are there, work contract services are there, which have huge revenue implications. It is unlike other items which you are saying employee insurance and other items which may be smaller in nature. But these are bigger items, and for to take a view whether to keep them in GST or like allow ITC on them, it is a big decision which has to be taken in due course. I am not sure whether time is ripe right now for taking those decisions just because the revenue is good at this stage. But and we should always keep in mind that it was only last year that compensation cess has been over. So states are concerned about their revenue also. So there may be a time to review all these restrictions, and maybe at an appropriate stage these restrictions will be taken out, if not all, some of them at least.
Thank you, sir. We all look forward to those times, actually. I'm sure the time will come. And the fact, I mean, that is why I said, I mean, law is law, but at the end of the day, there is logic also, which should always prevail. Deepak, I know you want to interject, but we only have 15 minutes with.
Just one point here.
Yeah.
So I completely agree that this review would be, I'll say, a policy decision of whether to reduce the list or not. But as your signed circular only on outdoor catering has brought so much clarity. So at least on some points, because there is industry-wide confusion. So let us say on schemes, let us say even on goods destroyed or on construction, there are advanced ruling coming that even air conditioners are not plant and machinery. So if not a legislative change, then at least a clarification for the industry so that again, the agenda, one of the agendas was legislative changes or clarifications or reducing litigations. That has been the theme of the day. So those circulars again have been very helpful for the industry in reducing litigations. And if a clarity on this is there, policy decisions would of course flow and would take time. But a clarity of what the government itself thinks. And it need not be a positive clarity only. If let us say the government is of a firm view that credit on this is not allowed, that's also a welcome move. At least it would not in future keep the industry in confusion. So that at least can be considered.
We have not received too many representations on this aspect, which item is covered under 17.5 and which is not. If you really feel that there are some issues, you should send it to us, because as and when we receive such issue, we try to clarify. But on this particular issue, we have received, on one issue, telecom towers, we had received some issues from telecom industry, about which there was lack of consensus among the law committee and council. We are not able to give any clarification on that. But other than that, on 17.5, we have not received any other
So, sir, we had moved a representation 4 years back on the employee insurances and health insurances. And the logic that was extended was that if we are allowing credits for insurance of plant and machinery.
You should, like, again I am saying it should be only clarificatory. It is not that you should, I am not saying I can change law. But if there is any issue which you are saying requires clarification, whether it is covered under 17.5 or not, we are ready to examine it and issue clarifications if there is an agreement in council for that.
Now with so much of automation in place, systems are there, at least you have each and every details of, like what he's saying, I'm setting up a plant, you have a details of how much it is going in that construction. Every minute invoice-wise details are available with the system, in the system. That concept or that thought process need to undergo a change, because in excise or in VAT, those controls were not there. We are talking about an era where internet was not even a reality. We never thought there could be, in COVID times, everybody, even you had given some hearings on the virtual platform. Now we are in an era wherein you can control each and every, so maybe this construction credit, I think, should definitely be reconsidered. If I have the same logic, excise VAT, maybe I don't know whether in the representation it's there or not. But
What's your take on that?
Maybe we will be in a position to have a relook at it. But you are saying that the issue is that cement and say steel, they are still liable to be misused. It is not that that misuse has gone away in GST era, because these are the items which are used by common person for construction of the buildings, where he does not require any billing. And there are a large number of cases where the material is going to the consumers, but billing is going to
Sir,
some
I
other
am
places.
not on.
So that
we are
sort of
talking about
misuse,
B2B
that sort of apprehension remains even now. And I think with that apprehension only, this construction service or work contact service was kept out of ITC regime at present. I am not saying that we should not have a relook at it. We should definitely have a relook at it. But the concerns are there from all the people who will be taking decisions. So there will be a stage at which we will be able to convince everybody to have a relook. But I don't think right now we will be in a position to take that step.
Sir has already said that it will be considered some point in time. We'll have to wait. That is what, right, sir? Yeah. Okay, thank you. So next point, sir, and this is a big pain point for the industry and a lot of clients that we have kind of been working with. There is a timeline specified in the GST Act to claim the credits, which is of 30th of November of the succeeding financial year. Now, in situations where I have fulfilled all the requirements of the law to claim the credit, that is my GSTR 2A is matching, there is no mismatch, I have paid to the supplier, I have fulfilled all the conditions, my services are eligible or goods are eligible to claim credits. Why should we put a timeline to have or claim these credits? It was never in the concept under the excise law or CENVAT credit rules at least. And to that extent, it is again seeming to be some sort of an artificial timeline, because once an assessee has fulfilled all these obligations, he has kind of, there is a right which is getting vested into him. And to that extent, by putting this kind of a timeline, we are taking away that vested right. And again, I mean, there are so many litigation on this which are already there. And to be honest, I mean, it has to be a slightly more liberal regime when we come to talk about GST. And I think I would want to kind of have Himanshu's view before sir kind of shares his thoughts with us on this.
Completely, Manish, I agree completely with you.
I know.
And I think this 16.4 sort of take back the vested right which has been there, which has already been appreciated in the Supreme Court judgment starting from Daichi Karkaria. We have the opposite judgments also if we talk about T and VAT, where the Supreme Court judgment is there that it is a concession which has been given and it should be as per the statute in the provision of the law. But point here is, like, once I fulfill all the conditions, I have the valid invoice, I have made the payment in bona fide and all others, why this kind of a restrictions are being there? And in business, it is inevitable that something or the other is missed. I just add on with very two simple examples. Recently, I think in the morning session, it was discussed, there is an amnesty scheme for the people whose registration has been cancelled because of non-filing of the return, and they can apply by 30th June. Now the amnesty scheme has been there, sir, where we can apply, we can pay the taxes, we can file the return. What about the credit we have lost in that? Now if we try to take that credit, again 16.4 condition comes. I think there is a High Court judgment also recently, I'm forgetting the name, where it has said that it has to be relooked and ITC can also be availed. But this kind of a problem comes. Second very inevitable example which has been there, which is faced by everyone in the house. Now there's a clarity that we can take the credit at least by 30th November. Previously there was some sort of ambiguity. 30th November, sorry.
Earlier it was 30th September.
Earlier 30th September. What if the situation that I am not able to file my 3B because I don't have any tax to pay, but I have ITC to claim in my return? What is, where this situation will be catered? If we again look into the provision of 16.4, again we are stuck with this kind of a provision. So sir, considering the practicality, the inevitability, the need and the inevitable, the legislative right may not be the fundamental right, but as given in the constitution, there is some sort of deliberation which is required. We need to relook and then accordingly deliberate what could be the best next step, at least to deal with this situation where these situations create problems. And like, just last thing, then I can close my thing. one of my client have been served a show cause notice by the DGGI where they have asked the tax on one of the exemption he was claiming or the composite supply which he was treating, and it was now being treated as the mixed supply. Client is even ready to pay the tax and close the litigation, but the biggest problem is that he's not been able to avail the credit of the previous period. But again, the 16.4 come into play and the credit has not been eligible. When the judiciary is asking tax on output.
Himanshu, if you may allow sir to come in.
Yeah, please. Why we are not allowing the ITC part?
Now, this question also consists of a large number of parts, like why it is to be denied. Second, whether such provisions are there in other acts also, like no other acts denies this. I think Mr. Manish mentioned it was not there in excise also. But I would like to say that in excise act, there was a time limit for availment of credit. It was 6 months or 1 year, I think earlier 6 months.
And capital goods, it was
there
up
was
to 10 years.
Yeah, so there was a timeline in excise. There's no doubt about it. Yeah. So in GST, when it was, and GST, I'm telling you why it is. It was a different regime in excise, but why in GST it is essential, I will tell you. The timeline has been fixed because when you are finalizing your account, you are giving your monthly return, then you are filing your annual return. And at the time of finalizing your annual accounts, like almost all the companies at least are required to finalize their balance sheet, finalize their accounts, submit their annual financial statements to company board, and also thereafter file their annual returns. So at that time, at least these will be detected if you have missed anything. So it is expected that in a genuine case, all these cases where you have missed out taking credit on an invoice, they will be detected by that time. So the timelines have been kept like this, and timelines have been kept as close to filing of your annual return as possible. Earlier it was September. So then we thought, because some people mentioned at that stage that September is too early because we detect these anomalies at the time of finalizing our annual return. So we kept it on 30th November, which is as close as possible to finalization of your annual return. And after the period when you have already finalized your annual statements, your balance sheet and all the statements. So if the person is coming and then saying, no, I could detect it after that, then it is not done. You, in your statutory record, you have completed your statutory record, everything, and now you are coming up and saying, look, I want to amend it, I missed out it, then it should be missed out. Income tax also does not allow you to file your return after a certain period. After that, you will have to bear the burden of, like, you will not be given any expenditure benefit and all those benefits which are there in income tax law. So there are different provisions in all the laws for this. Second thing we must keep in mind, GST is an act which is consisting of like sharing of revenue between center and states, and they are settled at regular interval. So any ITC which is claimed, this leads to a settlement of revenue between state and center. And if we keep this availment of ITC totally open endlessly, then how the accounts will be settled between center and state? So we have to also, in GST, this is a peculiar thing which we need to keep in mind, because a number of provisions in GST are considering taking into account this settlement procedure. So one of the reasons is this also, but otherwise I am telling you, because the companies themselves finalize their record within a particular time, there is a need to close this process also. Now earlier there was no end date for filing of returns, like it was open. So this year amendment has also been made that you cannot file your return after 3 years. So this, because finality is required in any return filing system, and this cannot be kept open endlessly. So this is the perspective. Maybe this is wrong. You can say this is unjustified, but with this provision was kept. As regards legality of it, it is no law gives absolute authority to claim a benefit. Or the benefit which is available as per law is also subject to provisions of law. If when law itself is making a restriction, any availment of ITC will be subject to that restriction. So there is no illegality or unconstitutionality about that. Thank you.
Absolutely. It's interesting to have your views, and it's also kind of allows to kind of think through what government's thought process is. Deepak, I come to you, and it's a very interesting proposition. So there is a specific provision which kind of causes for reversal of ITC on transactions in securities and land and building. Now, interestingly, neither securities nor land and building are either goods or services under GST Act. So therefore, they cannot be supplied under the GST law, and they are outside the purview of Section 7 also. Given that these are kind of mentioned to be an exempt supply, the fact that these are not supplies, I mean, how can, whether one can say that it is an exempt supply or not. And to that extent, Section 17(3), the explanation per se, becomes contradictory to the previous sections, because what is not a supply cannot be an exempt supply also. Because if you look at the definition of exempt supply also, there also it does not fit in. Now, given that this restriction is there, what is your thought? And I would like to have your views on it. Because to our mind, I mean, this is clearly a big issue, and it's going to be a substantial one when it comes for reversal of ITC on these transactions.
Right. Right. So
just 5 minutes.
So again, I think this is another issue wherein, while allowing ITC, restrictions have been posed. A similar restriction, I'll say, again in service tax was also there, wherein for trading of goods, when the service tax, there was no levy on that. There was a reversal, and that has been subject to challenge in the courts. So one point is that I believe that this again would be subject to challenge of the courts. I believe in legislature's power to restrict ITC. However, whether there's a levy on that and how courts interpret it would be a matter of time of how the courts interpret it. But the idea is, like for warehouse goods or Schedule 3 transactions, there have been clarifications and retrospective amendments that there should be no ITC reversal on that.
There is
Barring
a recent provision to cause for reversal of ITC for transactions which are being undertaken in the bonded warehouse.
Right.
And this budget only.
Right, right.
I'm just saying, so while there are retrospective amendments, there are also
prospective amendments of
current
denial of
amendments which
ITC
are
on that.
kind of
Right. So one part is, of course, the legality of it, or whether if a transaction does not qualify as supply, whether legislature has power to deny ITC on that. And let me also proceed on saying a conservative view can be there is the power to deny ITC. Why I'm saying this is because if, let us say, a significant amount of business is only to that activity, allowing full ITC might be tricky. But a reverse case can also be wherein, let us say, land or building was lying in investment, and there is no, I'll say, specific service attributable to that. Denying most of ITC because the value is too high would also lead to an illogical results. So that I'll keep to subject to open how the courts interpret
the
it.
issue is litigated.
Right, the issue is
Because
litigated.
The question is whether it's a supply, and therefore can it be an exempt
Right.
supply?
But I'll say the practical, one part is the legislative part which the courts would interpret, but the practical challenges of it, of let us say in a particular smaller business, if there's a land and building sale and it actually amounts to 90% of the turnover, denying all ITC to that person or common ITC to that person would pose practical challenges. So while I do not dispute the legislative provisions per se, that is for court to decide, I also would like to invite the attention to the practical difficulties of how the businesses face in these aspects.
Absolutely. So, sir, I know that you are rushing, you have a hard stop. But Ravi, I would want to have your views on this slide which I am projecting. There was a discussion in the previous session also, where tariff classifications are being determined by way of issuance of circulars. And of course, I mean, there was a debate going on where it was said that, I mean, to determine a classification by issuance of a circular is kind of exceeding or stepping into the shoes of courts and determining something which has not been determined. And of course, it would lead to litigation, because department is bound by those circulars. So authorities are bound to follow it. I would want to have your thoughts, and then, sir, your words on it.
Manish, as per my view, certainly not. Circulars cannot change the classification. If you allow me, I would share one of my example. So
Just
Manish,
make it crisp.
It's very crisp. It's very crisp. So Manish, I am coming from a company where payment of taxes are more than the turnover of the company, right? We have one product called silver coated LIG. It is manufactured by a company, I think more than 3 decades. And classified under Chapter 20, which is food preparation which is food preparation only. So recently, government has issued a circular clarifying that this item doesn't fall under Chapter 20 food preparation. It falls under Chapter 21 and attract 18% GST rate. And again, since it was a circular, liability of differential 6% is calculated from 1st July 2017. So one thing which I would like to highlight, that GST are not paid from our profits. We are just government agent. We are collecting GST from the public, submitting to the government without charging any fee. Right? So,
So you are an intermediary then?
in that sense, yes. So if government would like to touch that kind of sensitive issue, they must first consult with the industry. Fortunately or unfortunately, we are the biggest player for that product. Almost 80% of the market is captured by us. So without consulting the industry, government has suo moto changed the classification. And what happened after that? Multiple DGGI agencies from Rajasthan, agencies from Delhi, agencies from Haryana are behind our life. Came to our factories and instruct us and call senior officer of the company, including CFO, myself, and they clearly told us, boss, itna paisa aapko jama karana hai, otherwise we'll lock your factory, we'll publish it in newspapers, and this kind of tactics they are using. So my simple point is, if government want to touch those sensitive issues, so they must first consult with the industry, and even if they feel that change in tax rate is required, so it should be prospective, not retrospective. This is my point.
It's a very relevant issue. It is an accepted position that circular cannot change any classification. There is no doubt about it. And no circular can change classification on its own. But then circulars are being issued for clarification of doubts. And no circular is issued on its own. Government does not know, like they have to, like there are doubts in industry. The doubts are created by people themselves. They are referred to the government or council by industry itself. And then only they are taken up by different committees. In case of this rate-related issues, fitment committee discusses it. They then suggest it, and then council approves that. But the thing is, there are number of cases where they have where it is decided that that the rate is determined as per circular to be higher than the general business practices. Then they have also taken a view that for the past, whatever has been done will be accepted. Like this is unique in GST, where we are saying, we are clarifying that it is clarified that the rate of duty will be so and so. However, for the past period, if whatever has been done, like as is on its basis, we will accept it. So there was one suggestion came, or one point of view came, that this is illegal what the council is doing. Like they are saying whatever has been done in past is in a way you are approving it, or you are you without any authority in law. Because earlier in excise regime there was a section 11C provision to come out with exemption notifications in those cases where as a general practice tax was not being paid. In GST there is no such provision. But even without that specific provision, council is going beyond that and allowing lower rate to be paid in the past, whereas it determines that higher rate should be paid on that item. You are about your particular case, I am not aware. What should be the right classification? Maybe it is done on the basis of some representation from the industry. I am not aware of this case. About the high-handed approach of the investigating agency, there are some cases, and I can tell you very clearly, CBIC at the level of chairman and chairman has warned and advised officers again not to use high-handed approach in its investigations. We had also issued an instruction on those, like where the amount was deposited during searches and all. So from the board side, from ministry side, there are clear-cut guidelines, but there are definitely there are aberrations from field formations. We will try to again bring it to notice of board to advise the officers properly.
That would be a great help, sir.
Thank
So
you, sir.
while
Thank
we
you.
had one more issue, but I think sir has a hard stop, as I said. So we would have to wind up this session. Before that, sir, if you permit, we can have two questions.
I'm sorry, but I've got a meeting fixed.
So, yeah. So we can have only two questions. So whosoever raises the hands first. Yeah, please. You are not audible. Not two questions, one question. One question will be given to somebody else. Can you? Yeah, do we have a mic there?
Good afternoon, everyone. I hope I'm audible now. First of all, we were taking this general position we were adopting for intermediary services was that IGST will be charged in such cases. Now that sir has clarified that it will be considered as an intrastate supply. So I'm just trying to understand that whether composition scheme, which is 6%, can be paid on services, will that be allowed for such services then?
If it is an intrastate supply, then only interstate supplies are out of its purview.
Yes.
So if it is an interstate supply, it should, technically, it should come under purview of composition. There should not be any bar in that case.
Thank you so much. For
Technically. But I don't know whether there will be such companies who are making supplies abroad in that sense, and they are still under composition.
No, the
You will have to also look at specific fact patterns of the
commission agents, the service providers, small service providers who are doing.
I am saying these are specific facts of the case which have to be seen case by case. Like I cannot comment in general, but definitely it's an interstate service, and if it is interstate, then it is not out of purview of composition per se.
One more question. Anyone? Yeah, please. And pointed question, simple.
Only simple question. we were discussing 16.4, I think, that ITC cannot be claimed after 30th November.
Yeah.
Sir has rightly said there was a deadline in excise, service tax,
income tax,
VAT, as well as in income tax also. And in income tax, we cannot file the return after a particular date or a day after the revision of date is over. Now, he's right that way. My submission is that in income tax, suppose I do not file the return by the due date, but I have a refund of TDS. And that is just like tax deducted by somebody else. So I have a claim. That claim I can make by making an application to the Chief Commissioner, requesting him to condone the delay for not filing of the return. Similarly, a provision should come over here also. If my ITC left is substantial, and I can prove on record that there was a sufficient reason for not claiming the ITC on that date, so I should be allowed with the condonation of delay from the Chief Commissioner or the Commissioner.
Well taken. Mainly, I think the issues which will arise in those cases where on a particular item tax was not there and later on it was decided that this item is taxable, which leads to availment of ITC on inputs, or if it is on RCM basis on the same item. So basically this issue will arise only in those cases. I think maybe it is worth considering at some stage. It's a good suggestion. Maybe at some stage it is also considered. Thank you.
Right, thank you everyone. And I'm sorry, I know that there would be many more questions, but possibly we can discuss it offline at a time during lunch. Sir has to leave and he has already signaled me twice about it. And so I think we have to stop here. Thanks a lot, sir, Himanshu, Deepak, Ravi, for your valuable inputs and thoughts. And thank you everyone for patient listening and contributing to the session. We look forward to seeing you on the other side. Thank you.
Thank you very much for a comprehensive discussion on the legislative aspects of GST. Thank you so much. Ladies and gentlemen, with this we come to an end of the National Conclave on 6 years of GST. Thank you very much for your participation and support, and now we request you to please join us for lunch. Thank you so much. Wish you a great day ahead.